So basically, I do expect it to get involved with this blue bar again above. The view app is up there, and I do think that through some time, perhaps some chop as well, we'll ultimately find ourselves at that blue bar above and the blue and white dashed line. We can see overnight we did hit it like that again, which is a really interesting way to do things because we've been testing it with absolute precision like that multiple times, suspiciously particular. So So basically, we've created another trend. Really slow open. Okay. Yeah, basically yesterday before the close, I set this like little alert right here because it was supposed to get back to that level. Let me see if I can find a picture. Oh no, I didn't post a picture, but effectively, you can see I posted an alert there, and that was hit overnight. And that was what we were looking at over the close. Basically, it wasn't much of a move, but it was a necessary one. See a lot of what we're doing here on the underside as well as the overside. Notice the absolute precision test on that gold bar as well. That was a gold bar that we didn't really get to yesterday, but it was still recognized in the morning. You can see that we basically made an S wave around it, testing it from both sides. No jack. Moving well. Just hit the downtrend. I'd like to see everything that we did out of the blue line. I was gonna say the bottom, then I was like the blue line as well. Everything we've done out of the bottom and out of the blue line. I want to see out of the other side. That's gonna mean the red yellow line gets tested. All these other fibs and everything, right? I understand that the 188, 200 is in this red zone. I don't need to see the 161, 120, all these other levels. Just clutter. Instead, what I'm really interested in is the fibs from the beginning of the move, the end of the move. Like, what are we gonna do at the 61 up here? That's a B point. The 61 of this move is a B point. A retest of the most recently broken trend. Current situation. We're interested in breaking the red yellow line. It's a matter of how, not if.
Break it well, break it quick, gonna break it slow. Breaking it, what we're gonna be doing. I don't care if it has a negative response first as well. Doesn't mean it ain't gonna break. That's just one of those lines. Now, could it break like absolute crap and have a negative response to the gold bar and kind of come back for a retest and fumble it? That's something that's like a 60% chance, so we have to watch out for that. Which just means that it wants us to wait a little bit more, which I'm like, oh, okay. I have to survive that time anyways. And it's not like it's going to be doing anything for anybody else. But that's okay. You know, at the end of the day, here we are responding to the red yellow line, having a little bit of a negative response. Nothing too crazy. I don't think that anything too crazy is supposed to happen around here anyway, so it's kind of buffering out the really aggressive traders. Because, you know, it's interesting when you see that everybody can come in with a really aggressive mindset and then it doesn't give them anything. And it's like, what does that mean? What does it mean to have been aggressive at a point that didn't offer any need for aggression? It's like, well, that means that that aggression was kind of squandered on that area, you know? So I'm like, the way I kind of see this one is like save your energy because the real battle will be after we get above the red yellow line. Yeah, see, I love when I leave things like that. It just reminded me how much we loved doing this yesterday. Basically, when it has a negative response to the red yellow line, what it does is it identifies it for everyone. Like nearly every single person in the world will have that trend line drawn in now. If they didn't before, then they do now. And of course, with the two highs on the high and the two lows on the bottom, you know, it is very triangular, which is fine. Like I said, waiting a little bit here is kind of what we're signing up for. Let's take a look at the other indexes. Wow, yeah, the Dow's moving up. Dow just does what it wants. Yeah, it's really interesting. The SPY's up there too, like that. Like an N wave almost. Like if you think about what it did yesterday in this little schematic that I was talking about here, it's not like it's not an N wave. Like it basically goes up sharply and then chops like crazy down and then up sharply again. It's like that kind of movement. We get that. And of course, yet again, it's one of those days where we will have the people that were short yesterday got to benefit off of the decline of the open today, but it's not like the people of the open created the dump, and that's just an interesting fact that everybody had to deal with it down, not because of them or anything, but just because they woke up and they had to deal with it being down because some other entity decided it should be. And this is what we look like on the daily. We've left a B point above, just as significant as the one that we haven't hit down below. And that would be the 188,200 down there. That's way too far though. After a negative response to the red yellow line, let's return to the POC. And its interest will be in returning to the triangle that it's created. So we returned to the triangle as I was friggin' trying to make it so it's not blinding. You know? Deja vu to yesterday. Anybody that kept their stops at the extremes seemingly safe still. I guess people just don't do that. They can't take off enough profit to keep their stop at the extreme. It's just inhumane. Just think, anybody that's caught anything good today, they're going to try and overlap it until they have everything that you have, and then they'll take it to where you wanted it. That's the name of the game, I think, today, which is ironic. But that's the way I see it. It motivates me personally because I'm like, well, if you know somebody's playing the game against you, um, it's that much more you're that much more motivated to you're more compelled to win. I think than just a lot of people will see it as a consolidation that basically is never ending. They're like, oh, it's in a consolidation, must be a range day. It's like, oh, they just commit to the fact that it's like slow and they think it's going to be forever. Not me though. I know that when we end this range, it's doubling it at the minimum. And I don't think it's just doubling it that we'll be interested in, but more. More. Do we just get to the blue bar? Or is the name of the game to get a position safely to the blue bar so we can get through it? I don't see just a small move on the other side of that blue bar. And it's going to make sure that everybody that gets to that blue bar must really want to be in for that blue bar. Nobody will be lucky and end up there. They'll make sure they keep pulling back until everybody's gone. That's the name of the game. Some people can take the pullbacks and some people can't. But if you know that they're trying to get you out by pulling back, then don't let them have that on you. You know what I mean? Like, that's the way I think. Because, I mean, the sideways movement and the lack of opportunity for a prolonged period of time deters people, which you could expect, right? Well, I mean, like, I think, like, wow, I'm not going to have it deter me, right? Like, that's how I look at it. I'm like, all right, it ends at that. I'm like, it's not going to be a problem. But to a lot of people it is, because like it's so much so that I'm like, even the consolidation invites capitulation. It's another thing that you can find people saying, "I can't take this anymore," you know, and it's like, well, that means that it's become too much for them, and that they couldn't handle it, and they didn't have what it takes, you could say. And I mean, like, those are all things you don't want to have said about you at any time. So I'm like, oh man, we could avoid that just by having the energy to deal with it. Which, I mean, it's not easy, but it is true. The more that you deal with it, the easier it does become, just like anything else. And I mean, when you look back at it, like, do you remember the 17th consolidation ago? No, because it's just blended into the 18th. You don't remember it. So, we do ourselves a favor when we're just like, well, it really isn't going to matter in the long run anyways if we spend the time like with it or not. But if you don't spend the time with it, then you don't know anything about the environment, and you don't know anything about what it could do and what it has done. And I think that's incredibly valuable. And even just like how things form sometimes, not just looking at the candles as how they've laid out, but exactly the rate of change of those candles, how they've actually produced, and what they fluctuated like as they were forming those patterns is also really important when you get to see the same pattern again and analyze exactly how it fluctuated in the formation of that same pattern. And sometimes that little difference is all you need to see. And because you understood it so well, you'll be able to see the difference so well because you know how it's supposed to be, that you'll see a discrepancy so easily. Yeah, interesting. Well, we did break the red yellow line, contrary to popular belief. Everybody thought it was all over because it was breaking on the bottom of the triangle. Look at how even we made it on the other side of the triangle. Well, it must be a triangle, right? Look at how much time we have left in it. So, I mean, like, well, that's a write off right there. If it wants to essentially waste everyone's time all the way to the tip, right, it's fine. Because what it will offer the people while it's doing that is incredibly crappy moves, really. And I mean, if you've captured a long trade, which benefits you to sell at the blue bar above while you're waiting for the triangle to end. And if it demands that you try again, well, we'll have the energy for it. And I mean, like, that's the only way that I see to get through this. And I mean, like, it's not very difficult. But as long as you understand those concepts, then you should be alright. For now. And the people that run Wall Street are human too. Their limits of patience can be tested. And I've seen it. I've seen it. It's almost like the people that are at the top there, it's like what they possess that's different that I could say would be more determination, more discipline, and more patience, more severity. All things that lead to more accuracy, more consistency. And the more of those things that you have, the less emotional you become, my experience. Because we're only emotional when we don't understand the results of what are going to happen. See, now everything's working out quite well. But, if you expect it to take forever and it doesn't, it's a bonus. You can draw positivity out of that. Like, it's true. Like, I do that quite often. I'm like, oh, range is going to take forever. Prepare for the worst, right? And it's like, oh, it takes 5 minutes. It's like, oh, well, that was nice then. Good. It's like, didn't have us wait an eternity. I can draw positivity out of that, which is nice. But what I'm talking about might sound crazy, but what it is are the systems that I use in order to retain my mental composure throughout times that are otherwise difficult for most people. And I mean, like, what it means is you have to have some sort of system. some sort of thing that you can tell yourself. I don't care if you tell yourself that it's aliens that make you stay through the consolidations, but whatever it is, as long as it works, it can sound as crazy as it needs to be, you know? Like I even talk about things like, oh, if you've got a rule book and you start breaking rules, it's only your future self that you'll have to hold yourself accountable to. And if you respect that future self so much, you won't want to have to let them down. So I mean, that in its own can motivate you. If you think about it too much, you might think it sounds crazy, but it is the case that it can motivate you to continue throughout times that otherwise would make people quit, and keep a focused mind on the goal and the task at hand. And if there's anything that you have to tell yourself in order to make sure that you do that, then I'm 100% supportive of it, no matter what it is. Sure that you get things done, no matter how you do it. It's important that you see through things through to the end, basically. But yeah, no, it's like I would, after all I've said today, I'm like, well, how would it be that somebody is struggling with the current situation? And if so, I encourage you to speak up and explain what happened and why. Because it's been very clear so far to me, exactly what we should be doing. Um, today. And it's easier than I depicted it to be. So I'm like, okay, that's fine. It's doing all of the things I said it would do, but it's doing it quicker. And I'm like, oh, that's fine. I still prepared mentally for it to take the rest of this triangle. All of what it's given now could be taken back and essentially until the tip of that triangle, we may not be done with it. And I mean, like, am I comfortable with that? Well, I know as a matter of fact, there's nothing that we can do today that will keep us inside this triangle. It has to end at 10:47. So I know that's true. So I mean, like, how negative could I really be about it, right? Like, it's gonna, what, 10:47 is gonna come around whether I like it or not. So, and it'll come fast. Believe me, it'll be in the it'll be in the past in no time. And that blue line, it looked far away. It really isn't. 100 points altogether. Give or take a few, and I'm like, that's fine. The day really begins when we get through it. The sooner that people get out of its way, the better. And I think that that's what we're going to have to do. There's going to be some sort of maneuver that will effectively convince those that have their position to sell it. And I wouldn't be surprised if it spent a little time in a middle area, allowing people that have sold their positions to potentially get them back in an area that's not safe. What a better place to do that than in here? I mean, like, this area, if it wants to do that, I mean, like, is it allowed? Oh, yes, it has to be, unfortunately. But like I said, I cannot wait for the day that the candles move twice as fast with twice the amount of and size. Twice the speed and the size. In the future, it'll happen. But yeah, like, can you see? Or I was like, oh yeah, you want to see everything we did out of the bottom of this triangle happen out of the top. By the time that happens, we've broken the entire downtrend, and I'm like, well, what about that downtrend? Are we going to this distance right here? I think that's what we're doing right now. Suspiciously particular. A point at which could cause a little bit of a congestion. And I'm like, all right, do a little consolidation then. And when you do, we make fourth wave. Yeah, they just I can see they've had enough with the people today, and they want to get rid of them. And I think that this is the consolidation to do it. Is there not a report today, or no? How do I do that again? Oh, escape. There we go. What? Um, no, not today. January 11th. That's gonna be an interesting day. Wow, all that crap going on there. Yeah, be a good one. The 11th. The 61% retracement and the B point that I was talking about earlier has been hit now. So I'm like, all right, let's take a look at what we did. Or I'm gonna put this picture inside of this one and just explain. That's working out really well. That blue bar above ultimately. Anybody that's positioned themselves off the red zone is undeniably at a profit at the 61% retracement. And whatever dump we do here is a necessary one. I think that doing this kind of movement here would be okay. Why? Because it will do a nice trend readjustment. Like, what are we supposed to drive up on this thing? I mean, like, this thing is. I just don't. I don't like. It's not a. It's like it reminds me of somebody building a structure that's unsound, and then standing on it. I'm like, it just makes me uncomfortable. Hey, what's up? So far, so good. I mean, we did, we started out like this, and it was very clear that we wanted to get to that blue bar above, and we broke the red yellow line necessary to get us to where we are now. We're here at the 61 now, and this is a level where we did have a consolidation, and it's ironic because it's not really. I guess it is visible on the volume profile a little bit. Yeah, 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 yeah. I like that idea. It's weird when the shoulders are so small in comparison to the head, but I mean, there's nothing wrong with it. And I mean, it's positioned very well. A large inverse head and shoulders like that, be effective in this environment. And it's like, well, today we opened down. I would suspect QQQ to have some sort of weird looking gap. I mean, like QQQ might not have it. What about Apple? No. What else was down yesterday? Intel. Yeah. Okay. Tesla? Oh, this is my green zone. Okay. Interesting on Tesla there. Okay, then. Yeah, Tesla getting to its red zone is on the table, I think. I like the fact that they just retested that line like it was like, yeah, I don't mind that we did that last time. It was supposed it was subject to breaking. It's done a really nice. Yep, yep. It's done a nice acknowledgement of that same trend line though too. Interesting. Mhm. Yeah, yeah. Um yeah, yeah. Well, another thing that's weird about it though is I noticed. Okay, I'm looking at this. I'm like, where the hell is this? Did we do this somewhere? Oh shit, yeah, we did. All right, so that right there, that right shoulder being higher than the left is what I was looking for, and I'm like, man, it's already shown us that it could do that. And I mean, like, if this shoulder wants to be higher than the left too, then I mean, I can't bash it because it's showing us that it's already did that. Okay, and I think it did it here too, actually. Like some weird, like, oh yeah, my head and shoulders. Don't mind that the left shoulder is incredibly different than the right, but like it did go up on that pattern. It's like, wow, this pattern did effectively send it, more than twice, three times the size of its own existence. So I'm like, all right, that's cool. I'll ignore this chart. Loves to look like and I'm like, what is this? 161 and 61 combo again? We've been seeing that a lot lately. I'm like, what is that? Why we do that so much? Interesting. Yeah, if you put it on the X point, it's like it hit the 161. It's so weird how it hit the. Yeah, I was looking at that too. I was literally just about to mention the fact that it looks like a crab, but it's like, yeah. Yeah, an 88 to a 127. Yeah, exactly. Something like that. Where basically what it comes down to is it's got this like congestion area that otherwise likes to double up, which is weird because I mean, like, shouldn't it be going to the 261? Is it what, the 127 that makes that big of a difference? I wouldn't have thought so. To reverse at a point like this would mean to not get these B points down here too. And I mean, like, you know what's crazy about this is anybody that positioned themselves from this area is undeniably right in the middle of this entire move. Where yet again it becomes the case that those that decided to hold are still going to benefit from the reversal to the high. Yet everybody that tries to fight, like, it could chop and chop and chop and chop and then decide to come up. And it's like everybody fights and fights and fights to be in from a level that's close to all-time high. Whoops, close to all-time high on the daily. Like buying into a double top on all-time high, and I do think that we will get through this high ultimately, but it's so much easier for anybody that just decided to hold. And I have said this literally every day. So next time it comes around to when I'm doing capital letters in the chat where I'm like, hold 5,000 points, 3,000 points, 2,000 points. When we get to 2,000 points, don't sell your whole position. You know, like we hold accountability. We want to retain the ability to continue to 3,000 points, to 4,000 points. And if it means catching a 500 point trade in between while you're waiting for it to continue, then that's fine. A lot of people would fold under the pressure of 500 points against their position. If you had a 3,000 point profit target and you knew that halfway along the way it would have to come down 500 points, what are you going to try and do? Sell and buy it back 500 points down? Well, it means that if your target is here and you ultimately have to trade something that looks like that, if you get out here and have to take a risk by buying in here, hopefully it's not too tough for you when you do that. And I mean, like, hopefully you have enough time to catch the reversal. And I mean, just like at the end of the day, so much easier to have just held this bottom, hedged this downwards move, and continued to hold for the whole upwards movement, because that's what the biggest players are doing. They're not there with you trying to fumble back in at the 50% retracement. They're not there. They're literally not. And um, that's the
the key. Like, we got a perfect example of what's going on here. A lot of people will decide that trading in the middle is good enough for them. Yeah, sure, it'll still get to the blue bar, but the next time we make a major retracement, God forbid it doesn't cross the middle. I mean, how likely is it to cross the middle? 70% chance, probably. I'd say that's what they're up against. They're betting against a 70% chance, which is like killing me inside. And I mean, like 70% chance that you'll be able to maintain through the 50% pullback, or whatever pullback there is, if you just decide to keep your stop at the extreme. And a lot of people, they don't do that. They fret about the pullback, and instead of taking part in the pullback, they worry about the progress of their long-term trade, and they sell it or fold, and they think that that's the exit, or the way to alleviate the pain or whatever. It's just not the best way. The best way is to actually take that that problem and turn it into an opportunity. Because, like, think about it. Yeah, it's like you got 10 people. The first guy decides to sell the whole thing and not have anything to do with it. The other person decides to take the trade against their long-term one and make money off the decline. And then the third person, can decide not to sell it at all and just continue holding the entire time. Um, the fourth person could decide to drag their stop up, where they essentially get stopped out on the pullback. And I mean, like, the best way to do it in retrospect is to continue holding the long term and to trade that 50% pullback in the short term, benefiting off of the fact that you have to wait and it pays you a little bit. And let's say, for instance, you have to repeat that process 4 or 5 times on top of your long term position. So your long term position's here, and then you find an opportunity to take this move here. And then you find an opportunity to take this move here. And you find another opportunity to take this move here. And let's say, for instance, if you've captured all three of these moves to this point, you know that now you've got nearly as much profit having hedged it locked into the bank than you do on the entire core position. So why on earth would you ever sell it? Well, you're worried about losing this profit and this profit? Did you know that it would have to go all the way down to here before you're at a loss? So what is it to keep your stop at the extreme? That means the market has to make a new stream to get you out, and you have to yeah, no, it's just a lot more difficult for the market to get you out. You're going to be in its way a lot more likely than most other people. And after enough persistence and determination, you find a way to make sure that you're part of the situation that you want to be in for. And sometimes it will throw everything it can at you to make sure that you're not in it. And having survived those environments, you get to learn exactly what it takes to be in for them, and while everyone else has a reason not to be there for them because it's either too difficult, too slow, too this or too that. Um, it's like it just draws me back to hedging. It's like whatever the risks were, you turn them into opportunities, and it's like, well, whatever other people complain about, you can turn into something that you can, look forward to, which would be an incredible advantage for the other things that people fear to be something that you could consider an opportunity. I mean, that's power. It means that your information is incredibly more, it's worth more than the information that they're using, because where they see something that otherwise affect them negatively, you can actually see something that can affect you positively while you're waiting to get to your ultimate goal. So it's nice. Now, of course, here we are responding to that gold bar. The gold bar was like a level that we could have reversed off of yesterday, and we never ended up getting to it. And it was like today, all of a sudden, we are interested in responding to it. And we've responded to it from both sides, acknowledging its existence in a very nice way.
Deja vu in the morning. Here. Oh yeah, thank you, thank you. Yeah, the triangle had a similar construction to the one that we had at the bottom, and I'm like, well, I see a lot of what we did yesterday in what we're doing now. Sorry, so let's take a look at this. I'm gonna bring it on over here because it's like a template for the thing that we did yesterday, and it was very, very clear. Wow, it's crazy how much larger it looks in comparison to our range than to yesterday's. But effectively, that kind of maneuver we can see happen in here. A very similar kind of like N wave sort of style move. And then I'm like, I see that going on again, except it filled more of the triangle. And like the concept here is that it goes up sharply and then it chops down and then it goes sharply upwards again. I mean, it does that. That's the thing. And like you can see that that's the case here. It's like sharply and then it does this like crazy chop. It's going down sharply, right? It's like that's the characteristic. And then in here, we can see it's like pretty sharp and it kind of chops down. I mean, I guess it was pretty sharp everywhere here, but still, I mean, when it has the opportunity to be a little bit larger, you'll see that the downwards move can be a little bit more choppy than the nice upwards moves on the other sides. And of course, it can be upside down, which we will see. I mean, it's not going to just do it one way. We always have to be prepared for what it looks like in the opposite direction, because Sometimes it literally ends with the upside down version of the thing that we've been doing. And I mean, well, do you not think it would be dangerous to see the thing that we've done so well that's built us up so much to happen in reverse is a danger? But hey, did I not mention that we could do a consolidation at this area? And I mean, it is very much the same size consolidation as what we did here, and it's respecting the confines of the node that we had here. I'm like, all right then, that's fine. Yeah, it's like that right shoulder we were talking about earlier. The triangle definitely got its retest, and now we're attempting a continuation, one that I am skeptical of, but the blue line is near, and responding to it could involve time being taken again to step on it, to maneuver through it. I mean, it's a tough range. Like I said before, look at how precise we've been responding to it. I didn't make this today, right? Like I literally we've been using this range for a long time, and it hasn't been like using it as in, going from one side to the next, but actually using it like this. Like, what is that? Like, come on, really? Like, look at how close we got to it like that. Sniped it, and then just came down like that. I'm like, wow. And it's not the first rodeo with it. Let's take a look at what other things we've done to this level. Like here, it had an opportunity to use it, and I mean, like, look at it falling, 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 and the only thing it feels is this, the bottom of the blue and white line. And where does it start dumping from? Oh, the other side of the range? Oh, is it a coincidence? Well, let's see. And then we go back to it even more. Let's see what it was treated like originally. Here it felt it again, acknowledged the bottom, and stepped on it on the top. That's not even what I was remembering. Over here. As a small acknowledgement, very precise, very precise, very precise, very precise across the tops. And this is where it originally started, where it was okay for it to use the inside and of the blue bar. And then ever since then, I mean, the outside edges have been incredibly important to testing it with absolute precision. So I'm like, that's the history of that blue bar and why I think it's going to get back to it. Why I think it respects it, it acknowledges it. Do you know that the blue bar is coming to us, and at some point we will be above that blue bar, and it will not look like we could come back down to it? Because at the end of the day, if we go sideways, like this is a law, like a scientific law, where if we go sideways, we will run in to that blue bar. And when we go past the blue bar and we continue going sideways, you can see that, like, by the time we get to somewhere like that, having went sideways for a prolonged period of time means that to get to the blue bar, we would have to drop hundreds of points, And it's like, imagine what it would look like a week from now, how far down that level will be. And you think we're not even going to get back to it? I'm like, of course we're going to get back to it. It's going to be a matter of how, not if. Because you know what it would take to not get back to it? Not only not just going sideways, but we would have to drop at a constant rate of, it wouldn't have to be constant, but it would have to be a rate of 10 degrees. Sometimes it could be faster, sometimes it could be flat to make up for the fact that it was fast, but then it would have to actually continue dumping and maintain overall an average of 10 degrees or more in order to stay beneath that trend. So it demands that we must go down in order to remain beneath that level. And any sideways movement is threatening the break of that level. And I'm like, all right, well, that means that if we want to acknowledge a level, we either have to go sideways or respond off of it, right? Because if we don't respond to that level in any way, like it doesn't even budge when it hits it, doesn't even stop when it hits it, doesn't even reverse when it hits it,
Well, it's not much of a level, is it? Because it didn't respect it at all, and it's not effectively helping it stay with the blue bar, but instead it wasn't a barrier at all. So we have to understand the forces of nature are working us towards this level, basically, and we will have to exert energy to stay with it or away from it. And we could say that all of the things that we can see here now are the way that it is while we are beneath the blue bar. And the way that we see things now, the patterns that we see now, can all change the moment that we get on the other side of that blue bar. Because now it's holding us down. Without it holding us down, it may act differently. And that's just the logic behind it. But yeah, you know, this is a big, check mark for the consolidation here. We've stolen the POC from the low and made it at this point here now. The last trend break was absolutely terrible. We've had multiple retests, and all it's done is added to the consolidation. For a triangle that filled its tip, it was very interested in retesting. For a triangle that didn't fill its tip, it wasn't interested in retesting. And just to point out, we only have a few moments before actually getting to that tip of that trend. Or sorry, the tip of the triangle, where at that moment it will be physically impossible for it to ever return to this triangle and respond to it again. What it can do is respond to its tip and respond to the lines that it's created as a result of existing in the past. So, if this red line was the actual support, is it not true that we've taken this and, produced it out of the other side, but more? you know, undeniably more, right? It's almost like it's taken the other distance that it's made out of the bottom and also done that. Like I just observed that. It's very much the case. So I'm like, okay, that's weird, but it's true. Um, doesn't mean we do anything about that though, but it's just like another fact that we can compile in the situation. If we saw that again on another range, it would become relevant. Like you want to know where it would become relevant? Is if we saw it on the other side. And if this distance in combination with this distance amounted to being a different move, like that's very strange that it is that distance right there. Not like it is a distance that's really that. What is it over here? No, it's not. So it's working out well. Effectively, we have to watch out for a retracement back to the highs. Just like that. So basically, it's coming back to test all of the highs like that. It's very, very normal. Kind of gives me deja vu of this consolidation and then how we tested the highs before we continued. And I'm like, oh, deja vu. Tested the highs and then continue. It's the same kind of thing, except smaller version. And I mean, how many times have we spent the morning doing something and then that thing again happens and it's smaller? And then it goes on to do something else entirely. But is it not true that we talked about this being like a fourth wave? And it is like a fourth wave. Now we've got one, two, three, four, five, and this fifth wave
this 5-wave move, just because it is a 5-wave move does not mean it is bearish. It can be placed in the wrong spot. And if I'm like, well, where's the worst place to place it? At the bottom of a downtrend. The worst place to place this. And you know what's crazy? This is a bearish pattern, and it's the worst place to place it at the bottom of a trend. Because bearish patterns aren't necessarily the most effective at the bottom. They're the most effective at the top because they have something to reverse. Like think about it like, if we had something that was elastic and it was elastic back to this point here, like so that if you stretch it this way, it snaps back to the middle. If you stretch it this way, it snaps back to the middle. It's like you've got a nail here and you've got a nail here and you've wrapped an elastic band around it. And if you pull it up, it's going to snap back, right? If you pull it down, it's going to snap back. It's going to look like this if you're not touching it, right? And that's the idea. Um, when we when we pull it up high and it's got something to pull back, if you put additional force on top of its ability to come back to this area, don't be surprised if it's even easier for it to get there and if it wants to go through the bottom. Like let's say for instance, if you were holding the elastic band at the high and then you attached a weight to it while it was at the high and then it fell through the middle, it would actually go through the middle. It's very likely that it would go through the middle at least a little bit. Maybe it would start hanging there like like with a little bit of extended weight, but initially when you drop it, it'll smash through the bottom before finding a little bit of tension in the middle there, which is kind of hard to explain. If I had the actual nails with the elastic band, it would be easier to explain. But the idea that it has to come back to this middle area when it's in this consolidation, it's like we've got a nail in here and a nail in here, and we can actually say that throughout this period, this is like our elastic. This VWAP, the volume weighted average price, it does a great job at showing us the average price of all of the contracts and shares traded since the point that you place the indicator. And I mean, you can see that it's very much respected inside of many of the other consolidations until they're done. Like at the point that the consolidation is finished, you know, it doesn't care about this level anymore because this is a level while it's in this range, it cared about this level. Like how many times did it touch that white line? Too many to count at a quick glance. Same with this one. How many times did it touch it in there? How many like the same amount as this one? Maybe. That'd be remarkable if it was, but at the end of the day, they both have many. Another thing that I want to point out too is don't you notice that the difference in this area of the consolidation, you could say that that's maybe what 60% of this entire consolidation, and it trades like this, and then it gets all hardcore and it's trading like really sporadically in that last 40%. Now think about this area here, and then this area here. Is that similar? Like a smaller version, another characteristic we could say helped in its ability to take this range and double it, just like we took this range and doubled it. So yeah, all of those things are really interesting to me. Those are the really relevant pieces of data. So this is undeniably the fifth wave. I've seen this sometimes when the first wave and the second wave are incredibly close together, and I'm like, well, it's the basis of how we do an M or a W into an M. Like only two lines separate this from being a W into an M. Oh, geez. Sorry, hold on.
There we go. And here it is. And you know what's funny is it's the same line. Like if I take that line right there and I just double it, put it here, we have a W and an M. I'll show you. Like that. I mean, like, how is it not a W and an M? Make it a little bit more pretty, and it's like very, very clear that that's a W and an M. And I mean, yeah, sure, if it's a little bit off like that, are we gonna complain about it? Not really. It's acceptable for it to look like, you know, a grade 3M. Doesn't have to be a nice looking one. It could be very strange kind of M. See many different ways to do that. And you know, all of those M's formed without W's, and they all formed without needing a 5-wave move to be part of them. So I'm like, yeah, sure, you can make 1, 2, 3, 4, 5 and actually make an M into a W, but it doesn't need to. I mean, it can look like this, which I mean, it doesn't have any of this going on in this M. It's not a requirement. And I mean, what I see this M like is actually very similar to this whole thing up here, which is funny to me because it didn't do that. You know, it did quite the opposite of that. Eh. Then it has the audacity to rally on W's. Well, yeah, I think that that's very likely. We do have a VWAP in that very, very, very small area. Like, you know what's crazy is like the size of that small range. Like, it's 5 points. That's 5 points, that tiny range right there. It comes from way back. It's like way old. And I'm like, at some point, there was a tiny 5 point range there. And it's like that was our point of elasticity for the longest time. It was like it really got tense on the other side of that level, and it's like there was some strong elasticity right back to that point, and and it was like very much interested in pulling back to that level. I'm like, wow, how many times does it have to show us that it wants to be interested in that level? And now we've strayed away from it for longer than we ever have since we've been associated with it. But it is true that if we carry on the way we are, it's very much like a spike, like every other move we've ever done beneath that line, which is very suspicious. Because I'm like, is it not true that every single move that we've ever done below that level has come back as quickly as we've freaking left it? And I mean, like, are we doing that now? And I'm like, it is just the biggest one yet. And to obstruct it from doing that has been the, the not a good idea, you know, since it's been associated with it. So I mean, like, what is different now? Yes, we have a bigger move, but what is that bigger move, and where else do we see it? Is it like this? And what separates those two moves but a large consolidation? Now, is that not a bullish pattern? You know, as well, it brings an interesting point that this entire range is subject to potentially doubling. So this move right here, in other words, is potentially subject to doubling, which is ironic um, in this environment. Because it does have a spike where the baseline is the consolidation. And then we have another move where the baseline could very well be the consolidation as well.
And it's like if we look at where the consolidation put its volume, like this is the node. And it's like, where did we just run into? Are we at the bottom of that node? We are. I don't think this 5-wave move is essentially something that's going to obstruct it for long. I question whether or not it can make it through the fourth wave. Because we've had that a lot, and I'm like, alright, I was talking about 5-wave moves earlier. What did I say about it? I was like, well, it is a 5-wave move, but where is the worst place that you, like, if you were to say, alright, what is the worst place that you could place this pattern? Well, I would say, well, this would have a huge impact on its ability to go down. Because when people think, "Oh yeah, this is a bearish pattern," they forget to add one major part. Like, well, what kind of bearish pattern? Is it a bearish continuation pattern or a bearish reversal pattern? Or what is it supposed to do? What is the result of this bearish pattern? Is it and how is it best placed? Well, continuation patterns are meant to continue the existing environment. Reversal patterns are meant to reverse the existing environment. And in order to make this bearish in this environment, it would undeniably be a continuation pattern. Now, what's funny about this pattern is it is not designed as a continuation pattern. It is a reversal pattern. So it is meant to reverse trends, not meant to continue them. It is meant to be the trend that we really consider it's the pattern that we can actually use to reverse a trend. So if we are going up, 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 or it doesn't matter how we've been going up, like if we've been taking the stairs up and then we finally see that 5-wave move at the high, and and it and it creates a small trend of its own, it could put a lot of weight on the actual break of the entire trend that brought it there. And if there's like a nice B point down here and other levels that are suggesting its ability to be able to play out, a 5-wave move could be effectively positioned for its reversal. Um, but Mhm. So the thing is like whatever it does decide to play out, usually it's been going to the fourth wave, like I say. So the fourth wave is something that we could expect. But the gap, take a look at this chart. Yeah. No, no, I'm just looking. Yeah. Okay, so there's another line that I like here. This one. Yeah, that's a level I'm interested in. I honestly think that this one right here, it's a level that has screwed people over. People, I think, have, and I'm not sure if it's just ordinary people, but I think some big money's had some trouble at this level. Like, think about it. Like, what was this? And then another attempt to try and recover it. No, they fucked up. I can see that there. I think somebody screwed up with that. And I think that this line is going to come back to kind of taunt them a little bit, like we do when we pass a 188, and you can see people have bought into it, and it goes down, and we come back to give them the level that they
essentially screwed up on. And what's funny is usually it's without them. Like I think they get to watch it come back to where they are, and they're not in the same position anymore. And I think that that's what's happening to some people in this environment. When I see that line double down like that, it's like, what are we at 261? Let me look, because these are levels where I could say that our interest in responding to these levels is directly associated with our ability to get back to this level, which again, it's a matter of when, not if. A lot of people will be like, "Oh, is it going to do it?" It's like if it does or it doesn't, it's like a huge thing for them, and I'm like, "Well, I know it's going to get back to that level." So that's the interesting part about it. How, not if. How is a big thing because this is a problem, but it gets back to it. This is an opportunity. A W could be quite attractive. And I mean, like, what is involved with getting to that level? Well, in this case, or in this case, is it not true that you would have to be exposed to the break of this trend, or no? And is it not true that this point here could end up being the best price? Well, in both cases, it is true. So you could get that. The value of being exposed to the trend break is relatively high. And I'm like, well, if it makes 11 lows here and takes an eternity to get to this level, it might not break out to it. But when it breaks out, it might break out through it. That's another option. I mean, like, this is a game everybody has to play for giving up this position here or for giving up this position here. Because anybody that's still holding doesn't have to play this game. That's the irony of it. Hmm. That's good. Hmm. Yeah. Mm, I wouldn't say so because it's stuck to it pretty. Well, I think that there are times when the price can drag that line around, and I think that's what's getting ready to happen right now. Yeah. Moving average? Well, the thing about that though is like it's gonna paste it to the beginning of the session every day. So we're looking at getting to that bar. You could see that that trend break was absolutely terrible. The fifth wave did not play out and break the trend as it usually would because it's not a continuation pattern, it's a reversal pattern. And what's funny is it's doing this to everybody now. They're all getting an experience with it, and it's going to give them a different experience next time it forms the same pattern. Mark my words. 2023 is a hell of a year, or 2024 is going to be even crazier. 2023, there was more failed patterns, I think, in that year than in a the past decade, literally. So it's like, wow. Like we had months where head and shoulders patterns would fail 80% of the time. Like you could count on it, and many of them I did. hmm With this, it's an interesting one because by the time it gets to the blue bar, it's not going to be any higher than it already was. If it is, it'll be minimal. That's it.
So yeah, that is the way. No better way to do it. Again, and I'm tallying it up every single day now. I mean, like, if you let this trade become a loss, you're doing something completely different. Enough profit should be taken so you can keep your stop at the extreme. You have the most chances of being in, and you're guaranteed to be paid whatever you take off. We've hit the short-term target, so that means payment is necessary. And now it's a bonus, everything that it does beyond that blue bar. And you want to know what I think it's going to do? More than what it did below the blue bar on the other side of the blue bar. So if you sell it, I can't help you. That's the idea. But if you're interested in looking for a hedge, then you're in the same business I am. Beautiful. The 261 is going to get tested from above. If you could turn that into an opportunity, then no stops obviously should be dragged above the blue and white line. That would mean that if it was to test the node below, then you would get stopped out. And name of the game is to be exposed to the red yellow line breaks. And of course, like, like I said in the chat, when it was going, this wasn't the only time that I posted about it. I mentioned that you could take some profit off, and the rest was to get what? Letting the rest continue through the blue bar. Through the blue bar. So just remember that. And then I was like, so 30-minute, another blue bar. I mean, deja vu, right? So you think this is good. We have to do this maybe 3 or 4 times to get back to that level. If we were to be interested in getting back to it as quickly as we left it, I'd be like, all right. Clearly somebody else is on board. The 5-wave move did fail upwards as it was supposed to because it was positioned terribly. And just because people see a 5-wave move, they think it's acceptable to short it. And they see a big dump, so they think it's a bearish environment, so they think it's perfect. And I'm like, oh, it's crazy. They think it's that easy. It just bothers me that they think it's that easy. Like, I work hard. There's another blue line. Where I thoroughly believe we will come back to test it from above. It's not a matter of if, but how. So I find it inevitable. And from the other side of the range, could it be? I'll tell you one thing, since we've been associated with this blue range, has been a hell of a rally. And it's like, yeah, that's a rising wedge on top of a 5-wave move to fail. What do you think, the W's are gonna work? I mean, don't be losing money on W's. Because they're not positioned very well, if you think about it.
And we've been going up on W's, but those W's don't necessarily have to play out. And for what they do play out, it's very minimal. You can tell it's not big money that's taking profit at those levels because there's not liquidity for short trades at the B points. Think about it. When they come down to these B points, you think big money is taking profit on short trades when it doesn't even hit the B point or stay there? I'm like, no, 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 no. They're not trying to do that. They're trying to be part of this. You can tell they're long. They're not losing, or they wouldn't be where they are. It's very, very, very much the case that we have to understand that there will be a pullback, and usually it's going to be the exciting bit that everybody wants to take part in and only finds value in after it's thrown in their face and they can see that it's going up, and then they chase it. And I mean, where do you think they're in from? Well, a lot of people are in from this middle area, but you want to know what's interesting? Is a lot of them shorted, and this movement is them losing their accounts or getting stopped out. A lot of the time, this kind of buying pressure is not found. Who finds value at the high of the range? It's people that have shorted it and put buy stop orders at the high, and they're just like, hey, drag it up another 20 points, drag it up another 20, you can take it, and literally, like, more and more people, now they're starting to dry out a little bit. You can see that there's a little bit of a change in the way that the volume profile is moving. So, yeah, yeah. Yep. A lot of people will assume that yesterday, because I didn't have much to say about a lot of the moves yesterday, but you know it was very slow. So the ATR, yeah, that's yep. Yep. There was a lot of usage of 61s yesterday. Um, Very back and forth. Trend breaks were important. Yep, exactly. I mean, it ended up grabbing most of the B points. I can't believe that they didn't get this one though. I mean, we're almost getting it now. Yeah, they're gonna get that one. There's no way they're not gonna get that one. That's just ridiculous that they didn't get that one. Look at the size of that thing, and it didn't get it. And I mean, like, you want to know what is funny to me about that? Is it was a 5 wave move failing to get to it. I mean, what happened there? Like, it's not. It didn't. I guess it played out a little bit, but you want to know who it played out for? If anyone bought into the 5 wave move, assuming that it was going to benefit them the next day, because that's where the day ended that day. It ended on the fifth wave, and I mean, like, sure, unless they could take profit at the fourth wave, after hours at 1800, it was no good to them. And I'm like, well, I suppose it ran into the next day a little bit there. Didn't get to the B point though. Oh. Seems like more trouble than it's worth. I was like, that's tough. It was tough on them. And then it's like, oh, you want to try a 5 wave move again? And it's like butchered, very butchered. Like here you can see that it made kind of like a cap wave. And that didn't play out right away either. It reversed off of probably the most bearish pattern, and it was like, all right, this was the pattern that everybody got to see sent it down. And then I'm like, oh, a small version of this pattern at the very, very bottom. We could see how effective that could be. And it's like, what, are you going to buy into it, assuming that this formation isn't going to create another downwards move or a continuation? It's a huge risk that it would, to be honest. Because I'm like, well, is it not true that it had a smaller version here and it worked? And I mean, like, what's the difference between that and this? Same thing? Looks very similar to me. And then they're like, here we go again. And I'm like, well, ironic that that pattern, third time's the charm, actually reversed it. I guess it wasn't third time's the charm. You can kind of see that it happened in here too. I'm like, what's that? Conditioning people to think that that's actually the way it reverses. Now remember, every single one of these patterns that it did has been bought out
in one swift swipe. So it's interesting. It's all bullshit. Every single one of those patterns that essentially inflicted fear on everybody, and it was part of this big downwards move that was supposed to be bad and scary and hard to be a part of, was all bought out instantly, pretty much instantly. And that's the reality of that, which I'm like, okay, it's a fact that every single bit of this crap was bought out. Every single one of these little ones, every single one of the big ones, every single one of those was bought out as swiftly as it was formed in one big go. So I'm like, wow, okay, interesting. Interesting. And it wasn't because of the immediate endpoint of any one of them. Like, when did this one, what was it because of this formation that we had this reversal? I actually don't think so. I actually think that it was more of a short-term cue that brought us back to this high than a long-term one, which is interesting. But funny enough, this blue bar is from days ago, right? So I'm like, it's from last year, as a matter of fact. And this ridiculous 261, it reminds me of how, when I remember I was saying we like to go back to levels that people have traded at and lost at to taunt them. It's kind of very, like, I mean, it's tough, but it's true. People will have shorted that 261, and it's going to come back and allow them to get out at the price they got in. And I'm like, we just allow for this to happen. We monitor how it does this. Not something that you want to be part of necessarily. And I'm wondering how we are going to respond to the high of the range. Not if, but how. And I'm like, okay, this area down here, do you remember I made this purple zone yesterday? Because it was a range, because it was a node, And I'm like, wow, look at all that volume in there. Like, we literally have the POC inside of that level. Like, it's right there. Like, we're at it, ironically. As a matter of fact, we're actually at it. The heaviest volume node in the big picture. And under no circumstances has it ever even tried to, well, I guess it tried, but it hasn't hit that level. And it's basically, it's made every fib relatively redundant. It doesn't look like it's really made them, it hasn't been too forgiving. But this movement here, I do suspect us to make it on the other side. Oh, we already have actually. And returning back to the middle at some point it's going to happen. I know that we will test this level, so it's between two levels, like a symmetrical triangle almost. There's these two levels, like we are undeniably going to have to deal with one of them come this time. By 1 o'clock, one of these levels will have to break. God forbid that changes something. I think it will. So, those two levels are quite powerful, and without one of them, things can change 100%. But until then, I think people that have shorted it are under a lot of pressure, and it's going to continue to put the pressure on. Like this, just remember, we did start with a spike. We had a consolidation. So it's like component number one was a spike that started where it ended, right? As quickly as it was made, it was taken back and it ended at a baseline. That baseline, once it hit that baseline, initiated a consolidation where it was confined within the barriers of this consolidation for a prolonged period of time until it made yet again another spike out of the bottom of that consolidation. And once it did that, it returned right back to the consolidation. So we can see that just like in this schematic here, it effectively did one of these guys. Big S wave. And it ended up right where it started, having made a spike on one side of the consolidation and a spike on the other. Those are facts of the situation. We started with a spike consolidation, ended with a spike. So we understand that that is the case. Another line, the yellow one, it's going to be something that we will undeniably have to deal with as well. And I'm like, okay, these are all things that can end this little crappy bit right here. And I'm like, all right, well, it's not too much time. What can it do within that area? Well, not much. More of what we see, sure. So it must be allowed. And we know that by the time it's, you know, presented with a barrier that can change things, what's the biggest change that we could get in this environment? Well, doubling this little crappy range. That's the first thing that we'll be interested in. Just because I say doubling doesn't mean any particular direction. It means volatility. It means an increase in volatility. And of course, with the direction insinuating that we're going to have to test this blue and white line at some point, it becomes the case that I do not care if this line breaks first. It does not make this one not test. The blue and white line gets tested regardless of if this line breaks first or not. Everything we see out of the top of that triangle is subject to being wicks and spikes that ultimately lead back to this line. I am adamant about it getting back to that line. It definitely will. And I don't care if it has to go sideways to do it, but getting to it is necessary to make a healthy continuation. So I'm like, all right, could it get to it like this and just go like, oh yeah, we go sideways in some crappy triangle to get to it? I mean, like, yeah, it could. Jeez, is it ever a waste of time though? But it is the case that we could do that again. Maybe a smaller version. Smaller means quicker. So I am interested in that. After all, we've seen many big versions come first, which is not normal over the course of my experiences. Uh, the bigger one usually comes after the smaller one, which is weird that it's inverted now. So here we are, having responded to the yellow line. It is something that we are dealing with now. How do we deal with it? Well, we test it from the underside. Do we get back to the blue and white line without having responded to it at all? Does it become something that we need to retest? Like the things that I think it should be allowed to retest it. If you go for it, it's very risky. But you know, the more you see it, the more comfort you might find in it, the more of a necessity you could find that it becomes to do the things that you see are required to get through this situation. Hey, remember when I was talking about this earlier? This is a 5 point range, eh? And we're here. I mean, this is it. It's kind of hiding behind the blue bar there, but this is that level. We are at that VWAP, and we are here. Um, yeah, so pretty much we're at that blue and white line. Beautiful. Any hedges that have been taken must be trimmed and made profitable at this point. Testing the VWAP from the underside, the white line, is something that we could expect on the short term. Any stops dragged below that line are subject to getting absolutely wiped out, and any hedges that you have can be held to the B point down below. That's where you target. If it comes back to knock you out, well, it should be profitable. But if it allows you to profit at the B point, then that's a bonus. No long stops should be dragged above the B point down below. I say they should be kept at the extreme. And if it wants to chop in the middle and then continue through the highs, it means you don't have to buy in the middle in order for the continuation. You can keep what you have now, and that's fine. And as I mentioned, all of this exciting blasty bit was retraced back in the form of a spike. I do believe we will surpass the spike's high ultimately.
Testing the VWAP from the underside is something on the short term as well, so we do have to watch out for that to become part of the equation. And when we get to the VWAP from above, we like to test the blue and white line again. So allowing for it to test the blue and white line throughout the process is acceptable. It's normal. So first off, we understand the value of getting to the VWAP. Then we have to understand the need to test the blue and white line from above again. All of these things should be allowed to happen. I don't care if it wants to test that blue line 5 more times, we let it happen. You drag a stop in its path of being allowed to test that line, you might lose your position, and I don't know where you're going to get it back. So, if you lose the position, then you're focused on the beginning of the next trend, which is the next downwards move, and I don't see that beginning anytime soon. So, here we are testing the VWAP from the underside. Now watching for it to test the blue and white line from above is acceptable too. I don't care if it comes up to hit the B point first. It's like it's just something that can happen maybe once before, maybe twice after it hits the V point. Maybe we make this M have a W first. It's like something that should be allowed, not something that should be traded, you know? One day this will be the daily, and the more comfortable that you are with it, the more likely that you are to find yourself exposed at the right points, safest points, and the most profitable ones. As we can see, we hit the VWAP, and we're, interested in hitting the blue and white line from above. Like I mentioned, it was like a move where we go, oh yeah, we hit from above, and then we come back down like that. It's doing exactly like it should, and everything is working out perfectly. It's like I cannot have it not be clear to anybody. This is exactly the way the market should be traded, exactly the way it wants to be understood, and this will change. Mark it down in a book of forever, moment that you should expect it to change. Because this is how you calculate the need for it to do things. Not because I've seen this a million times do I expect every blue line to work like this. Do you think there's always a VWAP exactly right here, just like the blue line, uh, and responding to the blue line? No, no, no. It's not always like this. But because the pieces are presented accordingly, I understand exactly the meaning of them. It's like I say, when we talk about words, are small. They're a bunch of small meanings, and a sentence is comprised of all of these smaller meanings to give a bigger understanding of whatever concept you're trying to explain. And everybody understands every single individual word in the sentence, but do you understand the meaning of every single one of those words collected together, is the main thing. And I'm like, well, all of these moves and all of these barriers presented as they are mean a specific outcome, mean a specific environment, mean that I'm supposed to comprehend it in a specific way. And you can see that market either respects it or rejects it. And you can have a very good relationship with the market and have it respect everything that you have to to do for a prolonged period of time, and you can choose whether or not you can act on something that you find absolutely clear, uh, or if you're going to trade something that's not. But patience is the thing that separates those two, and to have it is something that you can feel good about. And yeah, that's good. Here we are almost hitting the B point at the high, and it's like, well, do we have a W? We coming back up on a W? Well, technically, it made this like we're doing that. And I mean, could we make this into a 5 wave move? Sure, we could, but at the end of the day, if you allowed for it to come back and just test the lows so much easier than having given up your position to buy back into somewhere that's likely going to be part of a 61% retracement in the future. Because think about it. Like imagine we run, 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 and we're going up, 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 up from here, right? And we keep going. Even if we go to here and hit these B points, do you know that making a 61% retracement will get us back to the highs we're at right now? If we double this entire move. So I mean like God forbid it makes a really nice move and you're in from somewhere above the 61. It's terrible. I'm not comfortable with that. It's not something that I want to work hard to keep because I know it's going to be taken from me because I know it's not the best price that the market respects. It's like buying above a rising wedge that hasn't been tested. It's like, first of all, it's a bearish pattern that failed, and people that buy here undeniably late to the party. They did not anticipate its failure. It had to fail for them to find value in it. I'm like, ew, no, no. That's no good to me. That's not the best way to do it, and I can prove it. So like that's the interesting part about it. It's it's part of so many people's strategies though to be late, and I don't know why. Hmm. So these are, I believe that this is the more impactful line. On some of the songs in this playlist are a little hardcore. Change this up a bit. This like angry 13-year-old music. Take a look here. This top line is a lot more attractive than the bottom line. Basically, we understand there is a triangle there. This blue and white line is not anything of any kind of interest to me anymore. It's just been downgraded to your average blue line. I'm gonna take some of these old ones off because I don't want to have clutter for people think that I'm considering all of this down here. Like this line, I'm not looking at it. It's not doing me any harm by leaving it there, but I'll remove it for the sake of it, so that people don't have to look at it and think that it's something I'm considering because it's not. After all, we could respond to it in the future, and I value having those lines in there, but a lot of people shut off when they see them. And I'm like, you can either accept it or neglect it, but it is the way that I find accuracy. So consistency, and I'm like, if it takes looking and comprehending something that you otherwise find difficult to comprehend initially, um, I mean, maybe that's what it takes to get the job done. And how easy is it? I mean, after all, it is shapes. We learn them all in kindergarten. So, how difficult it could be to see multiple of those same things. I'm like, we're grown and we shouldn't have a problem with it. But people do. It's interesting. So interesting. A lot of the time I can feel the markets being brutal to those people, and they don't want, they feel sore, and they bring that soreness to anything that they see that's new that they don't understand. And I think that people need to change the idea of having their strategy. Their strategy makes them close-minded. That's where I come from. I'm like, watch me do this every day. It's not the same. Every day I have different expectations for the same thing. But because they're placed in different environments and they have different things around them, it's obvious to me that the result is going to be different. So, it's like putting two and two together. It's one thing. It's very much like that by the end of it all. And there's no need to be like worried or maybes or gambling at any time. And if you feel like you're doing that, you shouldn't act on any of it. You should wait until you find the clarity. The only thing that consistency thrives on is clarity, because you're never going to be consistent if you're not intentionally acting on plans that you've created that outline exactly the results of what your actions are going to be and what the risks are going to be for taking those actions. And you're comfortable with the risks because the reward outweighs them greatly. And that's like a law that is going to be happening whether or not you like it or not if you're a successful trader. So it's like it's interesting. Either we understand it or we don't. Like many of the other triangles, we can see that, yet again it's come down to the time we have left in the within the barriers. Now, like every other triangle that seemed like it had a lot of time left in it, now they're all part of the past and we've survived through every one of them. Give it 15 days and I guarantee you every single one of these triangles will be erased from our memories. It'll be a part of our subconscious mind. We won't be thinking about it. So it's like interesting that it can become a big deal while we have a lot of time left in the triangle. But in retrospect, we won't even be able to remember all of this difficulty. And you know what's interesting about this triangle is it can end the relationship with this blue bar. The blue bar, I mean, sooner we end it, the better, because we can get on to making a move that's of equal size or greater to the move that we had on the underside of this channel. I believe that it will end up ultimately pushing through the high of the blue bar. Now, it's okay for it to poke out of the bottom first as well, because that would actually be something that would negatively affect many people. Now, we want to be able to do this without letting short traders take profit. So, how do we do that? Probably by breaking the top line first, contrary to popular belief. Very much like a phase A, actually. Preliminary support, selling climax, automatic rally, secondary test. That is phase A. Save one part. The one part that starts it all, that's not named or anything like that. But this part, the preliminary support, it is literally done that. Phase A is completed accurately. Phase B? Phase B might be bad, but whatever. Phase B is supposed to be the triangle, not phase A.
phase B threatens coming through the high and then making another low again, and then just to end up being in a triangle. So it's like anybody that captures phase A gets wiped out on this or that, and then they start a triangle. Check it out. Like, let's imagine you're in from anywhere that's worth having in phase A. Well, is it not true that in phase A, this is the low and it's wiped out in phase B? And is it not true that in phase A, this is the high and it's wiped out in phase B? So what? And then it makes what? A big ass triangle? It's terrible. But it's true. Phase A doesn't offer the best trade in the Wyckoff, and it is the most accurate one. And I'll tell you one thing, it's like we've done phase A, gotten to this point right here, and then decided to go down below this point. That's what it's done here. So if it wants to rekindle the rest of the Wyckoff, could it? Yeah, it could. It doesn't matter that it's done one part wrong. It does one part wrong all the time. We have to understand that. And it's really a small part of the bigger picture. But like if we look at all of the components, like what is the purpose of phase A? Well, it's been accurate and it started and set the confines of the entire range. This might be the resistance, this might be the support for the rest of phase B, C, D, and E. Phase B might be a brutal consolidation. Doesn't have to be the exact minutia of movement that we can see on the schematic, but everything that it does can be completed in phase B. Like it can wipe out everybody in phase A, both directions. Maybe instead of doing the top first, it did the bottom first this time, and then it's in for the top second. Could it do that? Well, it would still get the same job done that phase B does anyways. So could we do that? Yep. Doesn't matter that it reverses the direction. It essentially does the bottom first and the top second. Usually it does the top first and the bottom second, and then starts the triangle. Is it a big deal that it does the bottom first, the top second, and then starts the triangle? No, not at all. I don't care. 2024 it could be different. hmm Yeah, what up? The 100, what do you mean? Like a B point somewhere? Oh, you mean like, okay. Oh, okay, okay. Well, it is almost a 50 now. You mean of this or? hmm Well, Well, it's interesting you say that. Usually we would. Usually we would. I think there's something different about this one though. Okay, the one thing that we've been seeing lately is when we get a B point down here that matches a 261 up here, which we have, the 61 has been on the B point. And it's just been it's been a phenomenon, and we've been getting to it. And I'm like, soon we're not going to. Soon it's going to change it. hmm Yeah, it could. I mean, yep. Usually, I mean, lately it's been getting back to that B point, and I'm like, well, the way that I think the best way to do today is literally having held the bottom, and you hold that, like I've been saying, and if you've hedged the high, then as I said, you could take some profit at this retracement level here, but you hold the rest for the B point. If it doesn't make the B point,
It doesn't make the B point, it doesn't matter because you're not buying it. You're trying to take profit. And that's the beauty of it. The market is tailored to those that caught the long-term upwards move and are trading this in the short term. Doesn't matter where it reverses as long as it doesn't make a new low. It's like the people that caught the low, they will undeniably be in as they benefit off of the decline on the hedge. And if you can take profit on the B point and then not have to try and worry about buying for it to continue higher, so long as it holds the low, you're going to be in. And the only way you get called back into work is if it makes a new low. You expect the hedge to get knocked out of the high and you keep your position at the bottom instead of fighting for somewhere higher than you're already in from when the market hasn't demanded you to. It doesn't make any sense to, in my opinion. Like this could be wave 2 and that's serious. Like this whole thing could be wave 2. So that's the messed up part. It could be, yeah, exactly. And because it's a, I was gonna say it's a little bit bigger than the left dip, but it's not. It could be a right shoulder, because it's like, well, it's a matter of fact that we came all the way down to this low. We made it back to this high, which could be the neckline. We came all the way down to this point, which could be the head. Return back to the neckline, and return back to specifically this left shoulder. And if we look at that, I mean, like that's the components of an inverse head and shoulders. The left shoulder, the head, and the right shoulder. The right shoulder and the left shoulder match the same level, and it threatens to take this head, this head, which is also the same size as the shoulders, out of the neckline and put it on the high. So, I see that being the case. We have to watch out for that. This is like it's returned back to the support of that range. It does remind me of a pattern that I've seen long ago where we had a rising wedge that would fail upwards and it would create this like need to come back to the high, and the only way that it would do it is by creating a falling wedge that would fail downwards to get back to that high. And I'm like, well, what why is it is it deciding that this is the way it should make an S wave? And it's like through two of the most notoriously effective patterns failing in order to meet the equilibrium. I mean, and I'm like, that can't be good for most people. I mean, and that's what makes me think about the composite man. I'm like, why would anything happen that's not good for most people? And who does that benefit? Wall Street? I mean, it makes me think about that. I'm like, well, of course it does. Benefits them. How do they make their money? Off the other people. The last thing to happen is for the purple and yellow line to break. Obviously, it's purple because it's associated with a symmetrical triangle. Getting back to the tip of that symmetrical triangle, I think is incredibly necessary. If you think about where we went down to, was it not like the tip of the old triangle? And it also was retested as we left it, and it didn't matter. So I'm like, oh, okay, fair play. Now, of course, getting on top of the blue line is directly associated with the um, purple and yellow line. That it's the same line, as a matter of fact, same angle, just lower.
Oh yeah, thanks. Yeah, another bit of a consolidation here could seem like a fourth wave to the highs that we've made here as well. And I remember distinctly talking about this five-wave move and its play out being just to the fourth wave. It's still the case that we've only ever just taken back the fifth wave. So I mean, like, the only people that we're stepping on are the people that decided to buy into the fifth wave, which is typically the reversal point. The market's like really not respecting anybody that's buying above the fifth or above the fourth wave. Because I mean, that's where typically people start to short it. You want to know what's crazy about that? Is anybody that started to short the fifth wave lost money. Anybody that tried to buy into the fifth wave didn't get to survive without, seeing a loss. So it got a lot of them out. So it just means to me that trying to short that fifth wave was wrong. Buying into the fifth wave was also wrong. Being in from before is what the market expected of you. That is the interesting part about it. Because anybody that didn't hold from before had to basically endure the difficulties of being late. And I see that every day, and I'm going to explain it every single day so that you can feel good about when you've held it and avoided having to play these stupid little games that the market presents to people because they've either given up what was good for them or they were late to the party. And I mean, that's the clearest way that I can explain it. I'll explain it different ways every single day. But it's kind of a touchy subject, So like my intention isn't to make one uncomfortable, but to really, lay out the reality of it and make it clear so that you can have a better outcome, so that you end up having something to feel good about by the end of it because you're aware of that it takes discipline and control and so on, and that you're going to set up a plan so that you can actually have that control and have the discipline to fulfill that plan so that you get the results that the plan outlines and you avoid the risks that you know that well, as many of them as possible, and capture as much of the potential opportunity as possible. So that's the name of the game. And when you can see that there's an easy way, and that way means holding with a stop at the extreme, having paid yourself by taking profit off, allowing for a pullback. You can allow for the pullback all you want, but you can realize it is undeniably more difficult to endure the pullback if you're not hedged. More difficult. And if you are hedged, it is easier. But you have to put in more work to get the hedge. And you have to plan for it in order to end up with it. It's never just going to fall into your plate, right? Like you have to want to hedge to do it. Like nobody naturally will just think I'm going to take a position against my position to make money on that while my position's losing. Like, a lot of people don't think that. So at the end of the day, when you put that little bit of extra work in at the beginning, it means that you don't have to fight the 11 low zone ever. It means that you're going to end up with the best price unless it makes a better one. You're going to profit off of the time that you're waiting for it to advance your core position. And it means that you're going to end up with the extreme, whether you're right or not on the core. Because think about it. If you are long from here, and instead of selling up here, you shorted up here, or maybe a bit of both up here, you sold a little bit of your position and you shorted against what you had left with the profit that you made on. Then, as it comes down, if your core is wrong and it falls all the way past this point, does 150% retracement, you're still short from the extreme. So when it comes down here, you're going to repeat the process and start buying again. But instead of buying with nothing to back you up, you've actually got this short to justify. Like, let's say you had three. Well, you can't buy two and actually make money on it going up. You have to buy at least three. So, in order to actually make money, you might be considering buying more than three because you're in limbo if you have three long and three short. So if you were to think about it, it might be three long and 30 MNQ short, depending on what securities you're using. But to keep it simple, you're able to buy that position back at less risk than you initially got it. because you're hedging against an extreme still. And let's say for instance this comes all the way back up and knocks you out of this high. Well, yet again you can repeat the process, except it's true that now it's going to have to pull back even more to get you out. And eventually it becomes too unrealistic. Let's say this becomes 2 weeks in the past because you put the work in to maintain that position. 11 lows, you've done this every single day. You feel like it's not working because it keeps coming back on you, and I'm like, well, the end of the day, that's what it takes. If you want exposure to the trend line and you're uncomfortable not being exposed to the trend line, and you know that being exposed to the trend line is good for you, and it's a matter of understanding the short term range and being exposed properly to the short term range to safely get exposure to this, well, that means that you have to understand the small short term requirements so that you can profit off of these little moves in order to get exposure to the big trend breaks. And let's say, for instance, if it requires 11 smaller little moves to be able to finally break that level, you know, you might find yourself working for that. But it's far easier to just understand that you've already done that here. This is like an 11 low zone. If it wants to do that again here, do you think it's really necessary for you to work again on it? I'm like, no, 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 no. You don't have to. You can strategize differently so that you don't have to work, so that you can benefit off of this move. And you can benefit off of the upwards move without having to work again like you did down here. And without having to take a risk again like you did down here. You know? It's like once you've hit the short-term target, which was the blue bar, and it only had respect for the blue bar. You can see literally things changed by the point that it hit that time, or by the point that it hit that level. Things changed at that moment, and things changed at that moment. The two times where you could say it was associated with the blue bar. Suspiciously particular that the dump that we had here was also associated with that blue bar. And its way of acknowledging kind of suspiciously particular. I do believe that we will get involved with that again. I am half tempted to put a fib channel set back on it because I noticed that this blue bar doubled down. Well, it didn't quite double, but it's at the 188 suspiciously particular. So it's literally at the 188. Usually what I would do is I would draw in a green zone, you know, and I would have that like that, red zone like that. And it just identifies exactly, and then the gray zone. And I don't think we're going to use the gray zone, but do I can make it. I don't even think we're going to use the red zone, but ultimately, I just find it very interesting that it had the inclination to use the 188 again. Because you know where the gray zone would be? Here. And that's ironically where it did reverse. Because it's the case that that fib channel set has been applied the whole time. And it's used it the whole time that it's ever been below it. And it's always come back to where? That line, which is the 100. And yeah, I do think that we're going to get the same kind of treatment on the other side. I find it inevitable, as a matter of fact. And I find it very, very likely that. Where's that pattern that we saw yesterday? Oh, I removed it. Let me draw it again. So, this. What does this have? This has a spike at the beginning, a consolidation in the middle, and a spike at the end. Do you know how similar it is to doing this? Oh, no, 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 no. Let me make it very clear. What's the difference? Well, it's true that this one begins with a spike down, has a consolidation, and ends with a spike up, as does this one. But wait a second, it is different, undeniably. Do you know that this one isn't actually a bearish pattern, but this one is? Interesting. This could go up still. The slightest difference, like this having a little bit of a decline, could change everything. Um, but the components are all the same. Like we have a consolidation, which is like you could say like this. Like we have this area, and it can be like this, and I suppose it could be like that. Oh, just take a look at something here. Truncated 5-wave move there. That's really interesting. 1, 2, 3, 4, and 5, and it cut off the high. The only reason why I drew this is because how do you take the components here that we have? The consolidation component, the triangle component, or this triangle component, and rearrange them in a different way than what is presented here. You've got either a downwards consolidation, an upwards consolidation, and a sideways one, sorry. You've got a triangle that points up or a triangle that points down. Hold on. Make it make more sense. It would have to look like that. Those are the components of the situation when it is doing this, undeniably. And we're going to be presented with it with these components, and until they are finished, we have to deal with this, and it can mean that this can come first, this can come second, and either one of these three things is going to happen between them. Another thing that can happen as well is we get this movement. Um, sorry, more like this actually. We could do sideways up and then down, or sideways down and then up. And we all know it can come from a downtrend, or it can come from an uptrend. So developing an understanding of the situation, what you can call that. 5 waves. When we go 1, 2, 3, 4, and then 5, but wait a second, it's got 1, 2, 3, 4, and a 3 drives. But the third low isn't exactly the lowest, which is interesting. I do notice that when it's not the lowest like that, you want to know what it means? Preliminary support, selling climax, automatic rally, secondary test. Phase A completed. Phase B is proper. Hold on, let's take a look. Because when we do this,
this is phase A. Like I think I can literally drag this over top again. Very similar. Like everything from the preliminary support coming down to the selling climax, the automatic rally, the secondary test, this move up to coming down to here, like we've literally done that. Or no? Like I'm like totally it's done that. And I mean, maybe we're not looking for that, but it is what I mean, it's true that it's done that. I cannot deny the facts, and I'm in the business of finding factual information to be able to work with, to be able to get any kind of conclusion from. It's based off of facts, right? Like distances that are fact, components, like I just laid out. Like they're very basic if you break it down, if you think about it. Like they're not. They're not anything but, like I said, kindergarten shapes, the components that it can form. They're not really too much more than comparing apples and apples, like being one triangle and another triangle. It's very, very similar. And it's incredible how much, care it puts into making everything even around these simple shapes and angles. Because that's all they are, is, the shapes are comprised of distances and angles. Like we have a triangle, which are three angles, two of which can be used by the market to, the third one is more of a distance, which is the beginning of the triangle here, the distance. And then this is an angle, and this is an angle that the price can respond to, basically. This is part of the Wyckoff as well. Um, the secondary test in phase B. So take a look. Technically right here. The farthest we've gotten into one in a while, to be honest. Farthest it's worked accurately for a long time. And it says a lot because there's a lot left. I mean, what happens next is typically not as accurate as what's associated with phase A, more triangular. That would be filling in this space. And then the controversial point, roughly around here, where maybe we get a spike that clears out this point, or maybe not. That's what it, that's what it basically is trying to say. Because in this environment, it may or may not make a spike out of the bottom. And you can see that that's after this triangulation, that it may or may not make the spike out of the bottom. As you can see, when phase C starts, the LPS can be above the support lines, the LPS, or it can be a spring below the support lines. So far so good on this move. Manages to make its effort at trying to clear out the highs or establish that support and resistance zone. Now, if we're to draw this in, I mean, we technically have like a red zone, and a green zone inside of this area, and it's by this point that we are associated with it. No, no, I'm just chilling. So like the three drives pattern played out. Yeah. hmm Um, well, that's the thing. It works like it wants to come back to the first of the three lows. Like even if it's made, uh, you know, this many lows, like it it doesn't care that it's not like actually it would be more like this. It doesn't care that it's made already multiple lows. It considers the last of the three. Like if it continues to go down into another gyration, this would then be the interest. Like it always wants the third one back. Basically, in many cases, we see that when we create that three drives pattern and that third one is untested, it is on the third that it moves specifically back to that first of the three. And the way that I've come to draw it out is very much like it is presented here, where it's like that. hmm Yeah, because we can assume that by the point that it achieves that short-term target, it could put everybody to the test, and have a test of integrity. And yeah, I suspect that we're gonna start to forget about the B points a little bit more as we initially begin the uptrend. It doesn't have to actually clear a lot of the B points. Like yesterday, I mentioned that it ended up getting to the B points. I'm just saying it's part of my expectations that we're going to start to see some of these B points cut short. And that makes it harder for people that are going long. And it's like this is just harder for people that are going long, not harder for people that are keeping their longs, but harder for people that are trying to get them back. That's the interesting part. I can leave that on. So it's the case that like I know well before even getting into the long trade that it's going to have that test of integrity. I can target that test of integrity for a hedge trade and benefit off of just taking profit roughly in the middle of the consolidation. And I don't have to worry about the pinnacle of reversal.
and worry about where to drag my stop inside of the area. It's all things that I think the victims are doing, the victims of the situation. And, essentially, we can be those victims at the extreme where it's actually valuable, where we know that it's going to have to be 100% retracement to take us out, whereas like it's not going to be 100% retracement to take you out if you're in from here. All it would be is a 60, and that's tough. I mean, buying, like, what if it makes a 60% retracement? Well, you're going to lose your position. That's the tough part. Hey, happy new year. So, like I was explaining before about the 61, it's like if you buy in late, right? Like first of all, the first thing, let's talk about being late then. Like the like into the trade. The idea that we buy in above a B point or something like that, it's always going to be late in my opinion. Like if you ever find yourself thinking, "Oh, there's an opportunity to buy in." Okay, sure you might be able to make money off of some upwards movement or whatever above the B point, but just I would be very careful assuming that it is something that could hold for a prolonged period of time. And I'm like, okay, sure. Even though I said that B points aren't likely to get hit as much in the future, I think we're going to start leaving them in order to go up. Because, like, think about five wave moves, right? Like, is it not true that in order to make any fifth wave, we've kind of left the second wave hanging? And how isn't that a B point? Could that not be considered a W where like look at today's low where it was like very, very, very bottom and it came almost back to the low, but it wasn't the low. And then I mean like that's totally a W. And I mean like it's showing us that it can be the case that it doesn't have to come all the way down. It could be just basically a 95% retracement, ironically, because I've actually applied the 94% retracement in there, um, because it does it. Well, no, sorry. Does it? But yeah. Um, and it means that those that are in at the 100 are undeniably protected, but it gets everybody else. And that means that how can you get in and make it so that you can keep your stop at the extreme? So it's like how much profit do you need to take off to pay yourself to keep a stop at the extreme? Because most people can't bear the fact that if they've gotten here and their stop is here, it's a loss. Now, if you've taken like if you've taken, let's say, one, two, three, four contracts, and you've managed to move them higher and sell off one, two, and and three of those contracts, hypothetical situation. Let's say you've done that, right? That means you've profited once here, profited once here, and profited once here, and you've got one left, right? That last one will have to go all the way down to this point before you can experience a loss. Like it's a fact that that last one will have to go all the way down to here before you're at a loss. All of that profit will be taken back by the time that this last one gets all the way down to here. So why on earth do you have a problem putting your stop right here? I'm like, you're still going to be left with all of this profit, right? Except if it continues to go, you have the flexibility to piece this off higher or hedge against it. And every single time that you hedge against it successfully, it means that you can technically get an extra one to hold and make it so that you're not just hedging against one, but more. And every single small short-term trade that you take means that you can hold on to more ultimately. You have the ability to justify holding on to more ultimately. And
Yeah, yeah, yeah. It's very, very common. Yep, yep. It's incredible, really, if you think about it. One thing that we've been. Mm-hmm. And the key to that pattern is like to make it safe at the point where it hits that first drive. Like let's talk about this for a second. So let's say like even these ones here, like one and then two and then three, right? Those are three consecutive lows. And by the time that it comes back to that first one, you must make sure that it is profitable and like I mean safe to continue holding anything you choose to beyond that point, because it could do one of these things. Like it's literally showing us that it is a fact that it can do that. And I mean it completes this successfully. Like undeniably it gives you the profit of this successfully. And I mean like, well, look at what it did down here. I mean still 1, 2 and 3. By the point that it hits this high right here, look at how cheeky of a move that was. Look what they did. Came all the way back down. Isn't that like rude? I'm like, wow, 1, 2, and 3. They come back and it's like fine, you get your first of the three, it's safe. And then they come all the way down to get you again. That's nasty, but it did do that. And then if you caught that price, it's like not only did you have to endure maybe 78% retracement immediately, and then a harsh retracement again, and then entirely most of it, and then again, and it's like, what else could they throw at you, right? Like very much as many pullbacks as they could, and that's what it took to end up with the best price in that environment. So I mean, like those that have the best price will have to have a strategy that allows them to be exposed to pullbacks as large as these ones. So keeping your stop at the where can allow for that, and if you at the extreme. And if you trade against the position, you're allowed to benefit off of if that extreme is knocked out. Because if you've bought here and sold some along the way, it means that yeah, it's going to have to come down to here to get your last few out, or however far it's going to have to go, but it's going to be profitable because you've paid yourself. And then if you decide to short it, on top of having paid yourself, you use that money to risk, some of the money that you've made here is ultimately risked on the hedge. And effectively, as you make money on that short, you're able to cover it and essentially add this to the fact that, hey, not only does it have to go down all of this, but now that you've hedged it successfully, it has to go down and take this profit back as well. Power. That's the idea. Gives you control. Whereas other people give their positions up because it's scary, because it comes back, because they can't take it, because they've seen 0 to 1,000 and it comes back to 200 and back to 200. They give them a taste of it. You think most people will be able to hold past that level? They'll be crumbling under the weight of the pressure because they watch like an emotional roller coaster. It starts from 0, goes to 1,000, back to 200, back to 1,000, back to 200. They're like, oh my god, I can't take it anymore. And it's literally that's the price of not understanding where it's going to go before you get into it. Having a target is really, really important. Like this morning's was the blue bar. And here we are having a consolidation at the area that was first appropriate to consolidate. When we talked about this area first, it was because there was a node here. Now there's a hell of a node here. It's really been consolidating there. And where are we at with the Wyckoff? I must say we've developed into that triangle quite well. Anybody that expected anything else but triangulation is ultimately kind of squirming around right now, right? Oh geez, that's hard to do. So, let's look at it point for point. It looks like it's actually doing this one. Hold on. So the preliminary support, selling climax, automatic rally, secondary test. Preliminary support, selling climax, automatic rally, secondary test. Then we did this upwards move to thrust all the way back up to this circle at the beginning, right? And then from that move, we came all the way down to clear out these lows. We did that. And then we came up not quite as high as the previous one, but to hit the red zone, and we did that. And then we came all the way back down here to make a spike out of the bottom, and we did that. So, interesting. What's next? The controversial large rally through the level, getting the blue bar. So far, so good. Let's see if it manages to end correctly. At the end of the day, what I could expect out of this is for the consolidation to end. It is true that the people that are buying here are exposing themselves above an untested B point and above the 61% retracement, which if you wonder why something could go wrong with it, that would be the primary reason that I could say. But I'm like, the people that are holding can watch the show. You don't have to take a risk like everybody else because you're doing it right. And we knew well before this pullback that holding and not putting a stop above the B point was very important. Because holding not only allows you to not have to take a risk off of trading in the middle, you don't have to become part of the biggest node. Because it is true that this is the equilibrium to a triangle or and an S wave. But any upwards movement that we do that doesn't get us higher than the high ultimately gives us a triangulation. And I mean, we're gonna have to deal with that. That's fine. Then there's nothing wrong with that. We will get out of that triangle as we have every other triangle that has ever existed in the history of the market. Because the beauty of the triangles is that they have an end and we can see it. And they've been pretty good about ending at the tip lately. Not not that's one thing that you can say is very likely to happen is that we get an increase in volatility after it being contained within a triangle. And it reminds me of something that you know you've like you've coiled it around something and it's essentially like you're trying to wrap it as much as possible around something and it's resisting, and as soon as it can't be wrapped any tighter, it just releases and starts spiraling outwards. And effectively that's how we can get that expansion, from the contraction to the expansion, ultimately trying to exert the energy that was otherwise contracted into this expanding area. And I'm like, it's totally like the other things in reality that have been compressed, and we need to, you know, release that compression. And what does that look like when we do that? Does it not look like this? It totally does. It's all of that built up compression being released, and it I mean the effect of that is expansion, essentially. From the moment that everything has been compressed, it starts to expand.
And if you can't compress it anymore, the last thing for it to do is to expand because it has to continue. It's like um it's like a running water that always has to continue. And it's like when it's obstructed, it builds up so much that it bursts through whatever's holding it back. Nothing is strong enough to hold the market back in time. Like it's forced to continue flowing in time. Like, nothing can make it stop, right? So it's uh it's something that we have to understand. Like with time, every single barrier is going to be met. Anyone that's coming to us essentially is going to be met, and we're going to have to deal with it. And that's this one right now. Both of these levels are going to have to be dealt with, and one of them by this tip will be broken, and we know that. So I'm like, well, if we've got two things holding us back, one of them forced to break by this time, well, could we expect things to change? Well, yep, I think so. And if the schematic is dictating uh, the reversal, we should watch out for this B point. The problem I have with it is that I can tell already that if this was a 261, it would be lower, or essentially the 61 is not going to be exactly here, I don't think. Yeah, I was like, if we went a little bit lower, we would make it the 61 at the B point, which is not the 61 right now, which is kind of abnormal. However, I want to tell you about something abnormal about that too, because this was the last demonstration that we had of a 261 leading back to a B point that was a 61. And I mean, it didn't care about the B point or the 61. And it didn't really even reverse at the 261. It reversed at the, what, 300? And then I look at this and I'm like, what would it look like to reverse? But not to this B point though. Yep, yep. So this one that was the B point. I mean, did that B point line up with the 61 as well then? That's the interesting part. Oh, it did, yeah. So that was probably the, okay, okay. So yeah, well, I would consider this all short term here, but it's mhm. Well, it becomes an interesting situation when we have a B point that's untested here, and then one that's here, and I'm like, this one gets played out, and this one doesn't. So that means that anybody that tries to go for this one is undeniably losing money, regardless of if the second one plays out well or not. I mean, think about it from the perspective of the people that are losing money on the first one that didn't work out. Does it matter that the second one works out? Well, not unless they add to their position and profit off of it, which means that they have to take on even more risk to be part of the second one. And if they don't because they've been stopped out, then that means they're just making money off of that second one to kind of reduce the blow off of the loss on that first one. So I'm like, what's the difference between the two? This one's bigger and that one's smaller. The smaller one's likely to play out, more likely to play out than the bigger one. The bigger one's almost played out now, even though it's from off of the 300. What's interesting though is that there's this bar right here. That's a 188 200.
That's the 188 200 to this blue bar, like it's doubled down to get to where we are now. So it's kind of intriguing that we've officially doubled down now, like very much to get to where we are right now. It's officially doubled down. Like if I, let me see, you can see that that yellow overlaps with this, and doubling it down exactly is the end of the green bar. That's basically what that represents. B point's now hit. And effectively, we've managed to make a fifth wave past the fourth, clearing every B point that there has been since it broke the trend. And this is the market's way of saying, unless you were exposed before the, unless you were exposed before the trend break, it didn't respect that you chased it. Because anybody that bought when it was obviously going up was then retraced in what I call a chaser retracer. And anybody that is hedged can benefit off of the decline. If it falls through the bottom, you're still going to have the extreme. So it's like, yeah, I do see it ultimately getting through the blue bar regardless of this dump. So it's important to make sure that you withstand the spikes and wicks. But like the reason why I'm not putting those fibs on and I'm not interested in it is because everybody should be in. You know, why are we going for the lows that I've had nothing good to say about them? Because people are taking risks on these lows. What did I have to say about those people? You know, they're all people that have given up the good trade that I said to hold. And this is what happens, you know? So I'm like catching this low, I'm cringing again. I'm like, I don't want to put like things up here that basically entice people to buy in, or even like, you know, it's just not what I want to do. But I understand that the last thing that will happen is that we get through this high, that we get through the red yellow line, that it is valuable to be exposed to that line, and we have an incredible amount of space to do a lot of things before getting to that line. And it would be the case that if we were to run to it right now, it would invite a pretty decent pullback. So it's like I would rather it not. So a chop that adds to this is normal. Just like when we initially met this point, we came back to do a chop. And then when we initially met that point again, we did another chop. When I draw that in there, it reminds me a lot of an inverse head and shoulders to a head and shoulders because it creates that chop and has that around a specific medium point level where the last thing that we can see is that a spike out of the bottom and the top remain out of these three consolidations that happen in the middle. 1 and 2 and 3. Separated by the spike on the bottom and the spike on the top. The components are all the same. The consolidation in the middle. Sure, our spike's a little bit larger on the top and a little bit larger on the bottom, but it is the part that is the spike, and that is my point. And it is a part that's separated by this circle and this circle. The spike separates this and this, as it does in this schematic. And this is a sequence of 8 moves where we cross through the same point 1, 2, 3, 4, 5, 6, 7, 8 times in this entire sequence. 3 consolidations, 2 spikes, 1 triangle. This can be connected, and this can be connected. Like, let's talk about the 11 low zone from yesterday as well. The idea that we get into a reversal, right? And it's clear, right? And it has clear in intentions on reversing. And let's take a look. Like today's clear reversal was immediately at the open. Oh, geez. Looking for that blue bar above ultimately. So we knew that our job today is to position ourselves so that the red yellow line can break in our favor to get us to the target. How else are we supposed to interpret that? We understand that the yellow line is going to break before the red yellow. It being exposed to that could give us exposure to the red yellow line. Being exposed to the red yellow line is the only way that we could exit this environment, exit this node, exit that red zone, and get through and to the target. And okay, the next component of the schematic is the rally and then the chop. And then it dumps down to most of here and we start to chop and chop and chop and chop and chop. Usually what happens is we rally up a little bit, but not quite all the way to the B point. We miss it and then come all the way back down and chop some more. And that B point is left untested still. What we do come back for is that line. And then we rally through it. Most people, they can't handle this. It takes too long. They give this up because if they don't get wiped out on this pullback, then they give it up in this chop. And if they see this and it gives them hope and then it's taken back psychologically, very difficult for many human beings to get through this. We're right here right now, and yeah, it's been a little bit cheeky and it went, oh, down. And it was like there. Still above the clear entry though, but the consolidation I guess happened a little bit sooner, chopped down, and then happened, and I mean, ultimately it ends through the high on the upside. Yeah. So of course it goes without saying, anybody that did take part in that, if you did, um, you want to make sure that it's safe because it is true that in the event that we make a pullback that threatens this low, like think about this one. What did we do here originally? We pulled back here. And it was like, oh yeah, you're safe. It's just going to pull back to that point there. So it's like, oh, you think you're safe here. Well, that was like that. And then what did it decide to do after that? Well, it popped up a tiny bit and then did a 95% retracement, or maybe like a 90. And then it went all the way back up to the top and then took these people out. And then it was good to go. I mean, we could be here. That's the price of not holding here. This is, I mean, it means that you're like, we have to work. We have to monitor this. We cannot just accept the fact that we are in until the low gets taken out. And until the low gets taken out, we don't do a single bit of work. We monitor how much profit that we can take on the hedge. And yeah, it doesn't matter that you take some profit in here and it makes another low. You can take more profit if you have more to take, but it doesn't affect you negatively.
But if you took along here and gave it up here and you try to fight back for it, you're working, 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 potentially lost money, still working, and I'm like, unnecessary work. That's the idea. And I mean, it all starts with, understanding that holding is key. That the extreme, there's no better price than the extreme, and if you have it, then the market can throw so much at you, but until it takes that extreme back, you have the best price. How not, if not? And if it is so uncomfortable and so common for it to test you so much, then why not make money off of those tests? It's a different way to explain hedging. But every time you make money off of one of those tests and it comes back 95% of the way, but not all the way, because that's still the best price at the very bottom, not this 95% pullback. Not this one either, but this one is the safest, the farthest, and the most profitable to be exposed from. And it doesn't matter if you're in from here. If you've taken off a bunch of contracts up here, you can keep your stop at the extreme and you're just as good there as anybody else that's caught it. Your position is defined by your stop, not your average price. Just remember that. So at the end of the day, it's contrary to popular belief. People believe that where they're in from is the make or break of the position. But like I said, if you've taken 1,000 contracts down here, let's say, and you took off 999 of them up here, do you think you can afford it to drop 10 points below your average price? Of course you can. You'll be profitable by thousands of dollars. It doesn't matter that you lose 10. It's going to have to drop thousands of points for you to get out with a loss at that point. So even if we reduce that to you've taken 10 and you take off 9 of them, the last contract would have to go down this 9 times before it lost. So I'd have to take it down. That would be 2 times. I have to go 9 times. I'm not going to do it, but damn, that would be a lot. No, 9 times? Be a lot. And you could see that keeping your stop 10-point loss wouldn't really be a loss because you would have to go down 9 times before it actually was a loss. So, like I said, your position's defined by your stop. And if you make it so that your account is reflected profitably, regardless of if your stop is hit at the extreme, then what is the stress? Why is anybody ever emotional about it? Right? And if it's not, if you are emotional about it, then why is that not your target, like to make it your situation so that your extreme is profitable regardless of how the market moves. You're going to be profitable if it stays within the um, extreme, and even if it makes a new extreme, you're still profitable. And if you hedge it, your chances of retaining that safe exposure are even higher. And if the name of the game for you is to increase the distance between your core and your hedge, then that means it's just that much harder for any move to come back over your core. And if you're hedged, it doesn't matter if it does anyways, because you're going to be left with the hedge as your core. You hedge against it. Again, the process never ends. But you're held accountable. Each moment that you increase the distance between your core and your short, you have to work to make sure that you're on top of it at all times. And yep, exactly. Hmm. Yeah. And the yellow is because I find that it actually has more value in breaking. First doesn't matter to me as much as ultimately which one is going to break with the most value. I think that the movement that we get on the other side of the purple and yellow line will be far greater than the movement that we get
that we got out of the bottom. And I'm like, this is a movement that I could say is much like a spike. And I think that the movement that we get on the other side is not going to be like a spike, but more like a more like this, to be honest. Like, what are the odds that we move like that after having done this? What are the sorry? What are the odds that we do that? I would say relatively high. We end up with the blue bar and the B points above. So basically, we're testing the green zone. I can't help but notice that the distance that we made out of the top, or sorry, out of the bottom of this range is the distance that we had inside of the range. It's also the distance that we need to get to the viewpoint on the top. The distance that we could do on the other side of the node, get there as well. Now I wonder whether or not we did do a 261. No, no, no. It was the 241. That's interesting. Why not the 261? Now, would look like that on the other side. Interesting perspective. I do think that we will see that. Should watch out for it.
So like I said here, we can see that the green bar at the high of the chart is something of an interest to me. We can see we have done a test of integrity back to the level we initially broke the trend. So it means the market respects those that position themselves for the break of the trend and nobody that saw the value after the fact that it was already moving. This may be the case with future trends. So like this one. Could it be the case that we can see that when it pulls back to this point, the point that means that, yeah, it could blast off, but then pull back to this point because anybody that bought after the break of the trend is undeniably late. And that's what it's saying here. It was like everybody that was in from here is fine because it wasn't obviously moving up yet. But anybody that tried to buy in because they saw it was obviously moving up, the market didn't have any time for that. It came back for them. But anybody that was part of any of this difficult area was acceptable and it was allowed to remain profitable. And that reminds me about the like let's talk about this 11 low zone. Like if I just go in here and just type that. This is literally how I explained it before. Yeah, it's so interesting. When I was talking about this in the past, I would be I was going over this like a year ago, how it was recently, the W's, how it used to be, how it may be in the future. And we can see this too. Look when we saw on the daily lows, this is how they were using the public to accumulate. Basically, everybody gets into this really clear trade and they can't survive the dip. And if they do, they can't survive the chop. And what do they end up doing? Selling to the people that had the plan from the get-go to make it difficult so that people provided volume, because when they're interested in the clear trade, yeah, they're there. They all show up. They're all part of it. They all put their money on the table. And then somebody can buy that position from them. They become liquidity ultimately. And then basically what I was just saying here is that on the daily, we can actually come below this point because it's not the institutions truly accumulating anymore. They're just trying to screw people out of it because they shouldn't be trading from up there. And it's not them that they're overlapping anymore. You could see they had a problem with overlapping their average price, their position. I had white dashed lines down at the daily extreme. And basically, I said it has been known to go beneath the 11 low zones when it's not at daily extremes. Um, because basically, at the daily extremes, you can count on the fact that the big money is part of the reversals, and it's not just going to essentially be some middle area or like trying to buy high, and they're not afraid to pull back from a point that is high or in the middle. But from the extreme, when they've acquired a position, you can see that their uncomfortability was there. Yeah, the idea is it's supposed to get really close to the clear original entry. Remember, I put clear capital letters. They use everyone's buying power to get it going and convince them all to sell out on the pullback to the 88, and then aggressively make it uncomfortable for anyone to get their original exposure back in that chop. I used to call it the 11 low zone of terror. I'd often say to those that have the integrity to hold through, just sit back and watch the show. That's what this was, like a show. Stepping on it. I like that. But look at the whoa, 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 whoa. I just noticed something here though. Like it just went like this in this area. We went up from here. Okay, wait. We went up from here and stepped on it, and it went back beneath it, and then we came up again and stepped on it, and it jabbed down. Then we came up and stepped on it here, and that's the first time that the step has actually held. We pulled back to it again, and then we stepped on it here, and that actually held. This is the second time. But whatever was going on in here is kind of intriguing, because it managed to step on top of it and then it went down. But I mean, like, what's the difference between then and now? Well, we also came from the low. We responded negatively to it. Eventually, we worked our way through it to step on top of it, but then it fell down. What's the difference from now and then? What makes it go through and stay through? Be the question. Because oh, okay, like what about here? Like I guess we were always above it. Would have made more sense if it was actually like that, but but yeah, yeah. Because I was trying to think like, oh, was this a moment that we stepped on top of it? Because like at that moment, it did respond to it, and it did go up. Like it was a moment where the blue line came to interact with the orange one, and at the moment that that happened, we saw that there was change, just like here and here and here and here. So now we're doing it again, which I mean is a bit much, really. I mean, like, see if it. Oh, we're definitely in a triangle. Yeah, triangle's coming to an end though. Ultimately, I'm still thinking the blue bar is going to be the end of it all. Because like I remember we were looking at the whole picture here, right? And we could see that this was the first left shoulder, the first consolidation, then the head, then the second consolidation, then the head, then the third consolidation, and I'm like, what's this head? This is terrible. That's like not proportionate to any move we've ever done. And I mean, the one thing that's interesting about it is it's like it's tried to continue. I mean, like, what are we going to get a little pop here and it's going to do another one, and that's going to be a smaller version of this big thing that we've done? Because it is undeniably the same components. We have one consolidation, spike, and then another consolidation. We have one consolidation, spike, and another consolidation. And after that, we do a spike with another consolidation. And we did a spike with another consolidation. Maybe. Or did we not do that yet? No, we haven't done that yet. Okay, so I guess we haven't done that yet. It's kind of interesting. Yeah, yeah. hmm Yep. So that's an option if you don't have this low. So like that's what I mean. So like that's what you have to do if you don't have the low, but it's undeniably more risky than just holding the bottom and being patient through this entire environment, having taken profit on a hedge. That's the best way to go about it. Other accounts, yeah, it's fine. Oh yeah. Oh yeah, 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 for sure. Especially that 2 o'clock ATR increase. It's like that's the best time of day in my opinion. Oh yeah. hmm Yeah, it's like that first trade of the day better be a good one if it's over 15. That's what I have to say about that. Yeah. Yep. Yeah, and it's nice if you've got a little cushion to be able to, justify saying, "Hey, if it's an 11 low zone, I can fight it if I need to," or you can afford to take that risk because it's not like that first trade of the day kind of mentality. Well, one thing I've noticed as well is like the extremes that hold for a prolonged period of time don't necessarily have to be made on a heavy volatility. They can be really, really slow, crappy environments that nobody wants to trade. Everybody doesn't like the range because it's too slow, it's too small, it's too this and too that. And little do they know, catching the lows to that shitty, crappy range that's not paying them well to trade it at all actually ends up running into a long term trend and breaking it and running for weeks. And because they fought that small short term range that didn't pay them a lot and they decided to hold it overnight and they were only up 30 points and it ends up being up 100 the first day. And it's like the next day they build up another 200 points and they have had to do nothing but other than work for that small short term crappy range at the beginning. But because it was at the extreme, it's like, well, no better price than to end up with that one at the extreme. So it's interesting. Think about it like that. Interesting. Yep, yep. Yep. Yeah, I also find like, I trade like, after hour sessions, it's nice to, come into having already some progress in that day, and it makes me a little bit and if I already have analysis from the overnight session on there as well, I get to see exactly how it's responding to it, and I'm like, well, I know it's the big players that really make those after hours levels, because a lot of the stocks and options traders don't even know that those levels exist. Hmm. Yeah, yeah. Hmm. Yep, and I think it's hmm yep, and also the size is important. I think starting the day with low size, and just like proving to yourself like that you get, take an MNQ up to the B point, just short term, like get a feel for, clicking the buttons even and everything like that. I think it's important to get into the flow of things. And I think that I use the open for that. I know it's a little bit more sporadic and everything like that, but I reduce the size drastically just to make sure that I can manipulate the average price really easily if I need to, or even after having done that, it's still not even the value of an NQ at that point. And I'm like, okay, well, it's not incredible risk to get involved with that in environment. So I do, and I get warmed up with it. And then by the time that it's getting to that slower uh, point of the day, then I start to think about exactly what the long term exposure could mean, and what it means to be exposed from this short term range, and what the potential could be to holding it, and where it's safe to drag my stop and where I should be interested in hedging. those are all components that are part of the system because they happen every time I take any trade. Doesn't matter what pattern it is, doesn't matter what strategy it is, because there's multiple different strategies and everything. I don't just have one strategy, and you know, I it's mhm, 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 yeah, mhm. Yeah, I used to think that too. I used to think that, oh, today's this way and tomorrow can be like what's going to happen tomorrow, and it's natural to think like, is it just going to shut off someday? And then what's crazy is I just challenge you to just look at the market, and it's like, oh my goodness, you will be surprised with how much you find clear. And it's like you sit down at the day not knowing exactly what's going to happen, but then you start to look and you find things. It's like you start to hunt essentially for opportunities, and they're brought to you. Like, we don't get to decide how well the day is going to be, but we get to decide how prepared we are for whatever opportunity or whatever environment that the market is going to decide that we're going to have to deal with, essentially. Because and we can count on that to be the case every day. And I just think it's a healthy way to look at it, a way that keeps you in control and that keeps you serious about it as well. And two things I think are really important. But control, like I said about the institutions, it's all about retaining, obtaining, or maintaining control. Those are the three things that keep you at the top. And there's no other way to do it than to maintain the control you've obtained, or um, work at retaining it. And how to do that is by hedging. Because the other side, how do you reduce risk? Well, you can give up your position so it can never hurt you again. You can drag your stop up so that it can't move as much, and it might cost you your entire position, but it will be profitable. So it does reduce risk to a certain extent, but it also reduces your flexibility. It's a trade-off. And what doesn't reduce your flexibility is hedging. You don't reduce any flexibility on your core. You can profit off of whatever risk there is. So if there is truly a risk and you know it, you can make money off of it, and you can keep your stop at the extreme, knowing that the pullback isn't taking all of your profit back because you're making profit on the hedge. And if you hedge the same spot twice profitably while you're waiting for your core to continue, I mean, it's that much easier to hold the core. It starts to become, why am I even interested in selling it after you've made so much hedging? Um, and you start to realize that you lose control if you sell the core, because then you're gonna have to figure out when, you're undeniably not going to be making money on upwards movement if you sell the core. But until you sell the core, you're going to be making money in perpetuity if the market continues through all-time highs. So that means that you're only interested in one direction, but when it's not going to keep making all-time highs. And that's the way the hedge funds have it. And all the individuals have to wake up every morning wondering if it's going to go up or down. The institutions just have to worry about when it's going to go down because they will profit off of when it's going to go up. They have to have it go up in perpetuity for all those businesses that they own to continue benefiting them. And of course, they reap the dividends of owning the business as well. And that is the way that they have it. And we can see that. And no individual tries to set themselves up like that for some reason. It's very strange. It's like all they're interested in is other individuals. And I'm like, other individuals seem to be pretty convincing, but I say things that are hard to hear half the time, so I'm not like trying to convince anybody. When I'm like saying, oh man, like to myself, I'm thinking, geez, it's so hard to hear some of these lessons. And I'm like, well, it's what it takes though. I'm like, I don't know how to sugarcoat it, and I wouldn't want it sugarcoated for myself. So I'm like, it's a very serious thing, and we have to be very, you know, like particular about things. And I'm like, when I explain the reality of or the risks of what it is to stray outside of the strategy at hand, it can mean, you know emotional issues as well as financial ones for not following the rules. And I'm like, well, how else can I say that? I'm like, I don't want to be a dick, but it's true. It's literally, if you don't follow the rules, the other side of it is like nothing good. And I'm like, well, if you're not in on the current trade where it's like, all right, this is the safest place to be in from. It was worth fighting for and going through all of these tough times because we saw value in holding it. And if we're halfway through that trade, it's not really the best place to get in for it. The next best thing will be the next new thing. Okay, so that's basically the what we want to think about that. If you ever see that we're halfway through a trade and there was the right, that's the right trade to be on, and it's from the low, and everything that happens since then is kind of in the middle or not as attractive as that low. It means you're undeniably settling for less if you choose to trade it. And it's not like you're not going to see a new extreme again. Like eventually that move will have a high, and that's the next first trade. So you can be interested in that because there's a good chance that we're closer to the end of the trend than the beginning of it. And if you're not interested in catching the beginning of it because you're too late, well, then when's the end going to be? That's the next logical thing to think of, in my opinion. And it allows you to be in from the next extreme, giving you the same kind of exposure uh, value as your original core trade. Well, I am of the uh, belief that there's one right trade at any given time, and it's the way the market is moving. And if we don't understand it, we shouldn't be in on it. That's the way that I believe. And I'm like, well, it's like we've got limited chances, and we want to make sure that when we take a shot, it counts, kind of thing. And you know, when you're in that environment, if I've got limited chances and I want to take a shot and make sure it counts, like, do you think, well, there's the one thing that's really important in that environment? Doesn't matter if you're like shooting a deer even, but you're gonna make sure that you understand everything about what you're doing. You're gonna be confident in when you take action that you're gonna get results that you intend on, and you're not going to waste your chances, basically. Like, you're going to make sure that you're close enough. You're going to make sure that you're doing everything correctly. And in this case, you'd make sure that you're following every single part of the strategy to outline your safety and your ability to you know retain as much profit and get to the target as safely as possible with as limited risk as possible. And when there's an opportunity to reduce the risk of exposure completely, so the risk of keeping your exposure is completely reduced to zero, is possible by taking off enough profit so that your stop is essentially reflected as a profit on your entire account. And I think it's important to develop this situation every single day, and it allows you to continue holding what you have left to and through whatever targets that you have. And the more that you do this, the more that you can hold through those targets, essentially. And it's it's important to have a systematic method of doing that. Like for instance, every single time that you've made like a multitude of successful trades, you could then justify increasing the amount of size that you made or that you use. But then, not in any other way. You would have to justify it by making the profit to increase your size. So it starts by making a series of smaller profits in order to build up to that opportunity to be able to use more size to make more profit to use more size. That's the way it goes. So of course, here we are coming up to the blue bar. Allowing for a test of the red bar is also acceptable. Making sure that no stops are dragged anywhere above or close to that red is important. From that B point here, we buy some fibs. 188 there. Yeah. Yeah, I see that. Well, I do think that we're ultimately going to try and put the spikes that we had out of the bottom on the top of it. But playing out from the red zone to the green zone could happen first. Kind of like what we did here was like creating the node that we can then step on to get higher. It's not something that has to happen, but something that should be allowed to happen. I think it's dangerous to drag stops within its path. It could end up looking like something like this by the time that it's finished. Like an S wave in the middle. Very close to, a typical 5-wave move. However, the 4 and the 1 overlap. And of course, with the new high that we've made, the trend can be placed on that high. And I think it holds more value than this one. Very triangular though, to say the least. Interesting. We'll see if it can stand on it this time. Like a 4th wave almost. No, it didn't, yeah. It feels disproportionate, not gonna lie. It does seem disproportionate. Like it feels like it's disproportionate, this whole W. Like it doesn't feel that right for some reason. It looks like it's capable of going far more. Reminds me of the one in the morning, to be honest, that we had. It was like a crab. Yeah. Actually, it reminds me a lot of this one. Like, remember this one? It was like a W, but then it didn't come back all the way to the B point. It strayed all the way past and then came back. I mean, if we did that here, like it could use this to not get back to the B point, then come all the way back later, and then do this pattern again from the very bottom, not get back to the B point, go all the way beyond, and this could be our method of advancement. Every single time we come back to the consolidation, it's just like rising on ducks, like essentially this method. Here, I'll drag it over like this. Where we keep standing on top of the consolidation and advancing to another consolidation, slowly coming up, but every single time that we break a trend, it comes all the way back to test everybody out that was late, every single time. And then occasionally, as we go up, it can come back and cross these lows because they shouldn't be trying to go along there anyways because it's not low. So they come back and just snipe them out sometimes. I mean, like that's the kind of treatment they'll get for being late. We can expect that. That's like kind of what happened here to these people. You know, because they're ultimately going to get the same kind of move anyways. It's just it treated them bad because it didn't want people exposed from there because they should already be in. That's the way I see it. And I mean, like, you know, let's say for instance this one that did end up working at that 188.200, and it's like, what's the difference between that 188.200 and this one? The people that tried that one only got the 161 multiple times, and God forbid they lost any money on that, they would just be making it back on this one. So I'm like, it's just a risky environment. And out of all of these lows, 1, 2, 3, 4, 5, 6, 7 lows, hopefully they picked the seventh one. Because if they picked any other one, they lost money. And I'm like, that's the kind of environment that they're playing with. The pan is hot. And I'm just like, unnecessary risk. The whole time that we were in that consolidation, not once did I not mention the break of that blue line? It's the thing that we are going to ultimately end up with, regardless of how difficult it makes everybody that was late. Because how is it not the case? Because these people are ultimately late compared to these people, and these people get it difficult while these people get to watch. And that's been the case so many times that I call this the show, and that's just characteristic. The only reason why it does this is because it works. Is because people do grow the node. Because they all end up trading in there. They all end up part of this node. And they all don't realize that they're being herded. Big liquidity herds. And it's, in retrospect, incredible to see how many people will settle for the price that is not the best. And they'll do it again and again and again. It's like they breed more people to do this every day. And the institutions like clockwork feed on it, as the individuals are completely oblivious, eating up the news as it's presented, being interested in the same things as everybody is, as they typically do. Conformity killed the cat, like I said. And I like to think that what I do is very contrarian. So it's like, it's all from, okay, you know, this makes sense because of the facts compiled. We understand that this is the environment because of these facts. And these facts have meant this in the past. And related to what we have currently in this environment, we could assume that those facts, you know, in conjunction with what's going on, could lead to this result. And I'm like, well, you know, sometimes it's like, well, obviously. So I'm like, you know, that's when you take action. And if you've ever had that in the past, then you can wait for that again. You know, and the more that you understand, the more that you will have that. That is the way.
to the point that you can understand the need for what it does most of the time, and for what it and for the main things that it's interested in, the most important things. You know, essentially a lot of the time that it spends is doing things that aren't effectively making the biggest amounts of money in the best of moves. Like there's a lot of congestion areas that undeniably are part of it. It's not like we can get involved with this business and not have to be patient through consolidations or understand them. A lot of people, when they're met with a consolidation, they find excuses to leave, right? And I'm like, well, I think it's best to understand the consolidations and the need for them because they are oftentimes the beginning of what everybody's looking for. And it's like, is it not true that those that found value in this consolidation were only the ones that could benefit the most out of this? And anybody that found any value in anything but the consolidation was literally overlapped with a loss. Why is that the case? The market decides this is the way, not me. So that's the interesting. I'm just pointing it out as I do. I like to make sure it's clear. And when it does it every single day, so frequently, sets everyone up so it can knock them down. And they'll have you believe that the market is only the price it is because that's the price that people are willing to pay for it. I think that's a load of crap. Used to be the case when people mattered, but now they don't. It's all of the institutions. I think they have the majority of the money and majority of the power and the control. And if they don't, then they work every single day with all their resources and all that money, make sure that they do. And I have faith in them. So, what I don't have faith in is the average human being right now, the average person, the average individual. Um, I think that they're recyclable, and that's what they are viewed as the from the institutional standpoint, as I see it. Or else they wouldn't treat people so badly, so consistently. They would expect them to still be around, but it's not. It doesn't matter if they're around because they will find new people. That's what I've noticed. Interesting. It's ruthless, but it's the way I see it. And it's either we can be with them or against them, understand the way that they do it, or try to figure out what the other individuals are doing and try and formulate a holy grail strategy that you can repeat over and over again and have an ATM machine that doesn't take any effort and it's easy for you. I mean, like, that's a joke. And I mean, like, if you take a difficult thing and you do it so many times, don't be surprised if it is easy, Like, it takes a lot of energy to think about these things, but then, after you do it every single day, it might not take as much energy. Just like, yeah, there's many things that are like that. Because the more that you've experienced something, the more that you can rely on your expectations. Because the more that you experience things, the more that you can expect those experiences to formulate again for you, or the more that you can relate to current situations because you can find resemblances to previous experiences that you've had. And I'm like, all right, well, if you've had an experience that's similar to what's going on right now and you can relate to the results that experience you had, essentially, I think that you can really use previous experiences to, uh, gauge future situations in a lot of the situations that we're presented with in the market. Like, especially like how we're being treated with regards to pulling back to the consolidations. I mean, when do you think the public will get the picture? When do you think the public will get the picture that they're not supposed to be trading in the middle because they've been made wrong so many times throughout the day and they still don't get why? They just think it's happening to everyone else, so they're fine with it. Well, the truth is it is happening to everyone else because they don't understand the way the institutions do things. So it's interesting. And they all act on what they believe, not on facts. Like I don't act on my beliefs or anything like that. I act on facts only, that are clear outline results before I get into something like let's talk about anything that I've posted in the chat, like they're all very clear outlined like what I've been posting inside of the general room. It's like this one today, another banger this morning. Here's the first picture. It was below the trend. Precise as always. Don't miss out. Contact me. There we go. Move right to the blue bar. And then we've got another one here where this one was yesterday, where effectively we can see that we had a circle at the bottom and a circle on the top. It moved right into that circle, doubled the triangle, broke the red yellow line, deja vu. And then the day before that, well, the trade before that, we could see another one right here. Another move right from the bottom, caught all the way up. Another amazing trade. And then we got another one just before that, right here. Before it happens, let's actually look at that one. You know, essentially, I think you can offer a short-term trade that can profit enough off of the return to the blue bar. Let the rest continue to the high of the blue bar. It may take a few tests to get through the high of the blue zone, but it remains the short-term target for this multi-low zone. The high of the blue bar is a threshold that, if broken, can threaten a larger retracement. If you're looking, if you're long below the old all-time high and holding and hedged, there's no better way to be positioned. If you have a side account, capturing the reversal is my short-term interest. Keeping the stops at the extreme is key to having as much flexibility to get to the targets. It's working out really well at the moment. And all of those, yep, it sniped anybody out that put their stop within the green zone and red zone. And like what I was looking at with this one was something like this. Could be on the table. The tip of the triangle is the worst place to trade from in the history of mankind, so I don't endorse any new entries from this point. Effectively, for those that are monitoring existing trades, we're interested in it leaving this triangle. But like, if you had to go through the day again, the best way to do this day, if we were just to talk about the whole day in retrospect, is to find value in the first consolidation, which provided exposure to the biggest move of the day. The biggest move of the day that was actually a target, right? Because I was like, literally, the beginning of the day today, the target for that first post was um, looking for the blue bar above ultimately, which is like positioning below every single one of the lines that's supposed to break in the opposite direction, below the yellow one, below the red yellow one, to get to that blue bar. And then once we get to the blue bar, trimming some profit, letting the rest continue through the blue bar, and effectively now we understand the long term as well, and the value of getting back to that long term blue bar. 30-minute, same thing, exposed to the underside break of that trend. Yeah, and basically then there we are with that last post that I put in there. I just put it up there anyways. I'll put it up again, but that's it. The green bar at the high of the chart is something of an interest to me now. That's basically what we're looking at for the break of this blue bar. Oh yeah, I didn't put this up. See, we essentially have done a test of integrity back to the level we initially broke the trend. So it means the market respects those that are positioned themselves for the break of the trend, and nobody that saw value after the fact that it was already moving. And I'm like, okay, what did we do here? I said that it would be the case with future trends. And then as I read that out, I was like, well, what about this one? The one that we're doing right now? Well, is it not true that this is the point right here that it broke the trend? Is it not true that this is where we are? Because it doesn't respect these people that buy here. It literally doesn't. It always comes back to get them in this environment. In this environment, because this is the environment where it really wants people to be in before it shows that it's obviously running. And I do too, because I'm like, they don't like, I work hard for these lows to make sure that I'm safe, and I don't want people being able to catch them like halfway through the run, and neither does the institutions. And you know why they pull back like this is because when you sell their position, they'll buy it from you, and they'll hold this one and this one. Doesn't mean you should do that. I'm not doing that. I'm just holding this one. But at the end of the day, you don't have to take part in this. The institutions, they're forced to. They have to watch every minute of every single day if they want to keep that control. They have to keep that hedge in control every single moment. They have to understand that it's protecting assets that they cannot sell, or else they take a huge hit. So I mean, we have the luxury of being able to sell the core instantly, sell the hedge instantly. Makes it easier for us to be able to do it. And we don't need dark pools to hide our entries from the public because they swarm all over it like a bees on honey. Because as soon as the institutions put an order in, all the people, we've experienced this in the past where they'll buy things up and everyone just starts selling right back into this sharp move, and they'll buy things up and then it starts selling into this sharp move, and then they buy things up. They're like, hold on a second, it just isn't working the way we want it to. We have to find a way to either get rid of them or to change it so that they don't understand when we're making our moves. Dark pools now exist. Yep, we could see the same spike out of the top of the triangle that we had out of the bottom as well. One thing I know about the triangle is it's coming to an end. I admire that because it means that this VWAP from the beginning of this whole consolidation is going to start to become less important. What I think is going to become important are short-term trend breaks like this one. Strange it didn't manage to get back to the B point all the way, or not the B point, the 61 all the way. This is a previous old gold zone that we had long ago. It was associated with these points up here, which is so weird because it's still associated with these points up here. I believe this is an area we really want to be interested in. And it's not necessarily to sell there, but to break it, because it's a threshold. Yeah. Did 61? Oh, okay. You know when the 188 gets responded to, is it I want to see if it's at the 50 usually as well, because it's been the case that the normal retracement levels have actually been working in line with the 261s. And I'm like, what about the 188s? They have like some other weird relationship with like the 41 or something. Um, could be the case. Case. Yeah, this is the tip of the triangle, so it's got a lot of potential to increase volatility. 61's about to get hit. And it's on like a very butchered fifth wave move where typically the fifth has been a little bit overextended. Curious to see. When the B points that are all up here are already tested, so they don't provide much resistance the next time that we get to them. You could say they've been tested twice. Can't help but notice yesterday when we did 61s, we did a specific move beneath them. I just got deja vu because I believe this is kind of like a spike back to the 61. And every time we did that spike underneath the 61, um, it was inviting to a pinnacle of reversal. Curious about this one. We can see it too with precision is responding to this blue or green bar, which I dragged over because I could assume that it's interested in it. Because I think that it is interested in getting through and to this blue bar ultimately, and this comes with it. I mean, there's another one that goes even lower. I've taken it off, but Doesn't change the fact that it's coming to us and it's likely to be a result of having broken these two short-term trends. Um, Having left the triangle, we can see that we're rivaling the edge of this node. Everything that we've done outside of it so far has been pretty spiky, but see how it ends up here. Getting through the red-yellow line could change things. To that B point, it's already been hit though. Yeah, a little rough. Basically, that could initiate what I could see is a Wixon spike zone from this point, and that could change things. After having Wixon spiked, it'll look like a sideways consolidation with a bunch of spikes and wicks on the bottom, and that'll get us close to the red-yellow line. By the time we get close to the red-yellow line, those two MACD lines will be close. They'll be crossing, I think. And it's like I anticipate this, and they will change. Like that's the way I think it shouldn't be like that though. It should be telling me what it's going to do, and then and then it should develop my anticipations. But it doesn't. Like I anticipate that it will change, and it's nothing about it that is telling me to anticipate it to change. But I can see that it will. That's the interesting part about it. Yeah, this is a tough thing here. I think like RSI running into this level, it adds resistance. Yeah, yeah, oh yeah. It is a tough area. Yeah, yeah. No, no, it's fine. It reminds me of what we saw in that old picture where the W can actually have like a multiple tests as it's going higher like that. It's like the B point of this M has been tested off of nearly every single fib that it can get to. It's got room for patterns. Yep. Yep. It doesn't mean the people that are exposed to this red yellow line will ultimately be profitable the entire time that it gets to this one. Like it could chop here, break this line, do this, and go up. Yep. Thing is, well, that's the thing. The more wicks and spikes we do here, the closer these two lines are going to get, and the closer these two lines are going to. I think that the orange line is kind of trying to flatten out a bit. The ATR, the 7. Trying to think every single triangle that we've had today, it's been pretty good about retesting. I think that we get back to this one ultimately. You know what this reminds me of? Like, let's get the 11 low zone out real quick again one more time, and I'll just show you the original schematic one more time. Just remember, this is the clear entry, right? And then it goes up and it comes down, right? And remember this bit though. Like, this bit right here, it comes all the way back down. Chops. Give hope. Take it away. And we freaking did that. We did that. We're here right now. Like, it has done the chop in the morning, the clear trade, the entry, the run. It took the whole thing back to the point that it broke out. It started the chop. It gave the hope. And where's the hope supposed to go to? It's supposed to go to a blue line. Here. And it did that. And it responds all the way back down for another test of integrity. But when it does that, undeniably, it forms a new trend here. And don't be surprised if it doubles. Here. Oh yeah, yeah. Yeah, and it's so weird though that they act like this now. It's like, why don't they just work properly? Like, who decides that they shouldn't work properly? Who's it good for? I mean, because I can tell you it's bad for a lot of the people that assume it's gonna work properly. And I'm like, crazy. Yeah. 241, but the B point's not the 61 in this case either. Isn't that weird? It's definitely not. I can just tell. Which is really weird because I mean, what 241 has reversed and the B point's not been the 61? It's really been that way. I mean, this things have changed. Mhm. Mhm. Yep. Yep. This is the shoulder level for all those head and shoulders in the morning. I think we could have a pretty strong rally at the end of the day. This if this becomes in a W, I mean, it, yep, yeah, it could fight back a bit in there. Like it could do a whole Wyckoff in there to be honest. Like if you think about it, it could be preliminary support, selling climax, automatic rally. I really don't want it to do this, but if it did, it would go like that and then this and then that, make a triangle, and then finally go out maybe with a spike on the bottom. And I'm like, really? All of that? Please don't. It's just gonna take too long. I mean, just get it over with for crying out loud. So far, so good. I mean, who could be in their way? Yeah, I couldn't imagine too many people would be. It's like if they are, I think they'll be pretty surprised themselves. Yep, yep, yep. And the sideways movements are like they do kill ATR and people's profit and loss isn't going to flicker as much, so they're not going to feel that mental stimulation. Which I'm like, really? I mean, that's like who? It's like so trivial almost. Like it seems like we can't be like that. That can't be how the best are. You know, seems like a weak position. So it's interesting. Yep, yep, yep. Just slower and safer. I guess you could say safer. Yep. Because you don't have to put as much out there just to be involved. That's why it's safer. Because you could, with the money that it costs to get involved on a 20 point ATR, you could try a couple times here and still have money left over if you were wrong twice. And in 20 ATR, you might be wrong once and it could cost you like, the opportunity to try 4 or 5 times maybe in this environment where it's like trying with a few times in this environment and coming out on top is worth a lot more than not coming out on top at all on one trade. So it does make sense in that regard. But then the other argument would be like, oh, it's not going to pay you as much to do it. Well, I'm like, it shouldn't matter if you're just doing it right, as long as you're paid something for it. It's control. Sure, doesn't matter how quick it started. Yeah. A lot of people think that if they're not paid initially on the move, then, it's not worth holding overnight. And I'm like, so let's say, for instance, you fought all day on an 11 low zone and it ends the day with you profitable and you're up 30 points. Do you keep it? I mean, like, what have you been fighting for? Do you not think it's going to continue moving? I'm like, of course it's going to continue moving. So, I mean, if it's going to continue moving, well, then you can continue trading it, and you don't stop until you have what you want. And if you do, just because the market closed, you stop working. I mean, it's like you didn't come here because you wanted a job. You came here because, and it's like finishing at 4 is like a job, but if you're in a trade and it dictates that it's about to get to your target, or it's about you should be there for something, well then you're there until you're done doing what you're doing. That's the way I see it. Some nights it's like I'm there trading an after hours session and it might seem useless, but if it's at the extreme, I understand that multiple, like the previous all-time high was made at like 6 o'clock in the morning, and you know that, or maybe it was like 4 o'clock in the morning. Now that I think about it, yeah, I think it was 4. And there was a time where they were making sure it was pretty late at night that the extremes were made, and if you value catching extremes, then you got to be there for them. Yep, yep, exactly. Or unless you're managing a boatload of money, that it it matters so much. Like if it gets into, you know, hundreds of millions of dollars, it's like, yeah, it's like whatever. I don't. If I have to switch my sleeping schedule and not recognize daylight at all, I'll do it. you know, I'll if I have to. Yeah, I suppose. I suppose. It doesn't bother me being awake at nighttime though. So, I it bothers me being awake in the morning though. I don't like mornings very much. Tough. It's like everybody I see outside is kind of like dreading it and stuff, and I'm like, I don't want to look at them. I'm like, oh, jeez, tough. I feel like the after work people are far easier to look at. They're all like pleased that the work is finished and they're on their way home, and it's always like I don't know, everything moves a lot slower. I feel like in the mornings.
And if I'm already starting my day where I'm waiting and I'm like, you know, I don't like to start the day with that. I like to start the day with movement where it starts at the open, and I have something to analyze, some concrete moves to keep busy with, essentially. Not necessarily trading them, but in unless they're absolutely clear, but keeping that understanding is really important. So the first thing that I look for, no matter what I'm doing, the first thing that I look for is an understanding of what's going on. And it's like until that understanding happens, I cannot take action. And it's like imagine that you had to write a report on how you understood what was going on every time that you took an action. And it's like unless you can explain yourself, you'll be quote unquote in for it, let's say. And it's like who you're in for it to, you can make that up, but you could say that it's your future self, and you could say that they're better off because and they know what's good for you, and they'll be upset with you if you don't do the right thing. So it's like, well, it makes you take action to make sure that you're not going to let them down, and effectively you're going to follow whatever rules that you have, because I've noticed that you can set rules and put them in front of a human being and they'll break them, so that's like a risk, and it's like, okay, there's a risk that you'll break your rules. And I'm like, well, hold on. What can we do to ensure that that's not the case? That it's not the human being that's going to be the problem behind the computer. It's like, well, to make it really systematic, to have the discipline to ensure that our strategy covers the the risk of, okay, let's say it doesn't go the way that we want it to. How are we prepared to take the least amount of loss possible? So and to have as much potential to be part of the opportunity. Because I mean, like, just because you've taken a loss on a trade might mean that you've either clicked at the wrong like point, or you could have actually made a user error or something like that. But does that mean the trade's not there? No, it doesn't. It does it mean that exposure is not valuable still? Like, no, just because one person has had a negative experience with the environment doesn't mean that the trend line doesn't exist. Doesn't mean that, the blue bar doesn't exist. It doesn't mean that value that or sorry, it doesn't mean that the value isn't there still in being exposed to the trend to get to the target kind of thing. So it's kind of interesting to think about in that regard. And it's like what the human being will typically do. Will say because they've had a negative experience, let's say with a certain environment, um, they will wait for the completely new opportunity rather than still actually getting exposure to their target. And I think that the name of the game is always to be exposed to the clearest target possible. If you can see a clear target, the name of the game is to get exposure to that target so that you can benefit off of the journey to that target and to getting to that target. And of course, when we can see that there is going to be an environment that offers a clear, easy to capture entry, and then there's going to be a clear, easy to capture retracement, and then a very hard to catch, difficult chop with a pop that gets retraced and then it continues. That kind of environment means that we can benefit off of this move here and this move here, and also benefit off of this move here. And that's the best way to play this environment. A lot of people will try to benefit off of this move here, and then off of this move here, and then off of this move here. There's a lot more risk involved with that than just doing this way and keeping exposure to the upside. Because you know that if this whole area does not work, your hedge from the high is your new core. But you don't have to take a risk in this environment because your stop's at the extreme. So if it goes up through the high and knocks your short out, you still have the best price. There's no better way to strategize about this environment, to be positioned for this environment, than to not have to trade this middle area that's not the best price, and to stick to your guns and keep the best price,
and to keep the best price. Because there's no better price to have shorted it, and there's no better price to have went long. So it's interesting. Everywhere in here is not as good as those two prices. And if you chose to go long here and hedge against, you end up with the best price either way, and you don't settle for less in the middle. And what has it offered those that have settled for less? Difficulty and small profits. Not as much profit as the short, not as much profit as the long. Really interesting, isn't it? It's like it's designed to, to work for the people that have the core and then hedge against, and everyone else gets piled into the middle shitty zone. That's the reality of it. I'm like, wow. And we see this almost every day because it works. And like they don't catch on because when they have a bad experience with it, they go back into the workforce, and then this basically happens to the next batch of people that show up. The institutions are guaranteed to be there. So that's the interesting part. And when one individual has a bad experience, it's not like the rest of the herd, learns from it. They don't, as a matter of fact. It's really interesting. Whereas if the institution has a negative experience, I bet you that the other institutions will take heed of that. They'll find out. So this, I mean, I went over the potential for a Wyckoff, and unfortunately, it is continuing to do it, which it's not exactly the way. Phase A was proper. Phase B is brutal already. You can see it. Um, One thing I do suggest here is I'm like, well, this is a spike like that, and this is kind of choppy. If it made this kind of movement, that would be weird to see because we did that a lot before. Um, Not necessarily here, but it is very close. Where we did it was yesterday. We even did it on a very large scale yesterday. Basically, the components are exactly the same. Basically, if I just drew that in there, it's the same concept. And this kind of chop right here is probably some of the more brutal style of consolidations. We haven't really seen that kind of consolidation today. Multiple wicks and spikes pulling back to the low. Like notice that it has been pulling back every single low that it's been making, roughly like 95% of the way. That just created a trend. It's as though there is a blue line under here that has yet to test. Curious about its test.
these lows here, I would wonder if we're starting to develop a bullish divergence. Like you can see here, they're quite drastic that this is made a low and this is a lower low. And I mean, here we're seeing kind of an increase across the board. Like the green line is higher and the orange line is getting a little higher. And here we can see it's kind of diverging with the blue line. So we can see the beginning. What that's suggestive of is in the event that it does go sideways here, it's going to build on the fact that it does have a bullish divergence and that any sideways movement that there is to come from here is subject to having a positive impact on momentum, as we can see it already has. And that's interesting to me. I also am curious about the fact that across the board, it's lower here, like, but not here versus here. Like, this is lower and goes up. This is lower and goes slightly higher. Very slightly, but it is true. It's definitely not lower. Because, like, you can see here, it goes through the green bar. Here, it does not go through the green bar. Whereas, it does go through the low, even here slightly. And if I was to draw like horizontal lines on here, see that the orange line is higher, the green line is higher, and here just higher. Everything's getting higher. So I'm curious about that. Shows that there is a change because that wasn't the case here, between these lows. They were going down still. And it's only since this low and this low, which those two lows have had have we ever had that before? This is the first time we've ever seen that, really. And the first time that we've ever seen that, and it have a bullish divergence. So, curious about that. This is the red zone that we started in. Remember what it took to catch the red zone in the first place, and how deep the retracements were originally. And that originally, things were pointing down until the very bottom. But when we made that first retracement, it was even, if not, oh, it had a slight incline to it, so it was going up still. But when it started to go down, and this trend met that trend, notice that these were making lows, and at this time, it was going higher and higher, overall making progress higher. And as it continued to pull back to nearly the same level, and in this case it was even more of a pullback, you can see that it was not respected the same way generally. So we've broken all the trends at once in this environment, and anybody that could see the blue line, um, basically when we got through that blue line, it invited a move of equal size on the other side of the triangle. And you may not see the triangle, it's here between the blue on the bottom and yellow on the top. And it finds an interest in testing on both sides. The triangles are notorious for doing that kind of movement. It is undeniably coming to an end.
I can't help but notice that our consolidation that we have here is separated by a spike on the high and seems to have that spike on the bottom. Suspiciously particular, as a matter of fact. Could it be interested in making an equilibrium out of the middle? Now I look at this, and in the event that it does that, getting back to this point by this time here, which is after the close, check. There would be enough time if it decided to make the spike from here, which actually is not so bad. Because if we put that spike there, if it took this much time, it would be the imbalance. Like I think that this much time is pretty relevant because that's how much time it took on the other side. And like we were looking at here, I mean, does it need to take much more time? Not really. Like what we have here is like this, which is ironically a bullish pattern, which creates a downtrend. Um, see here. No, no, I'm good. I think I just have to do the distances here. I think this is a distance that we've seen many times before. We used it at this level before too, like we did there. So intriguing that baseline can start from this distance in time and end at that distance in time so many different times. And it's the same amount of time. And then I'm crazy for considering that it can take the same amount of time as the bigger one. I don't think so. I think that we've seen this take this amount of time so many times that when we see a move this size, to assume that it can be taken back in that amount of time is not crazy. In fact, you'd be crazy not to think that that amount of time or space could be taken back in the same amount, right? Because it's like what I see here is this movement. Let me try it again. Like this entire movement, it comes down to this and this so many times. This is interesting to me because it's not like anything that we can see inside of that range, is it? But what it is like this. Surprised we haven't seen more of that, to be honest. Another thing that's a fact is we haven't seen that since we've done that trend. But when we pulled back in that trend, this was how we pulled back to the time and the precision of it being this much time to get from here to here after having spent this much time going up this much. That is what this tells us, is that it spends this much time going up that much, and then when it comes down from this point to this point, and it takes that much time every time. We can either accept it or neglect it, but it's a fact. That's what's interesting. So how could we go about our day not understanding that that is a fact in this trend? Can we understand it when it happens upside down? Can we understand it when it happens and it's a smaller version? Can it happen in a smaller trend? No, that's one thing. This spike has only been seen in the morning, but it was relevant because it happened on the high and the low, and they were the best prices in the entire environment. That's why I still recognize them. Here, if we make spikes like that, raises an interesting question. We have retested this line, and I do remember talking about how we could effectively go sideways, pop out of a trend, and then retest it lower. And we've done that here in a strange way. And it's a nasty way to reverse it, honestly, but it is a way. And it does have a drive here, which I think could be considered as the first of the three. So it's kind of like an already tested B point, but a level that I could say the volume drops off from as well. So everything below it has been wicks and spikes until this move. And getting back to that
blue dash line would make it so that everything was wicks and spikes below it. The wicks and spikes that we get out of the bottom literally could be seen out of the top of this entire range. This range is pretty big, and we are outside the bottom of it, and putting this out of the top would not be so abnormal. Like, take for instance this consolidation. Like, it's suspiciously particular that they like to make these spikes happen out of both sides. You know? And it's suspiciously particular that they're the same distance apart, eh? Like, you can either accept it or neglect it, but it is true that they are the same distance apart. And could we have, you know, literally the two lows that we have here on the other side of the spectrum create two highs of equal size? You know, we've seen these two lows before. There. Huh. Yep. Yep. The blue line's the first of the three. Standard. You know, the last one that worked out well, I'm like, how much time did it take? Did it take this much time as well? I'm curious. Hmm. It's a little bit similar, but different. Like, the similarities can be found in maybe even just understanding that it took this much space, roughly. And I mean, I think it's gonna try and take that much space again. I I think that the result is gonna be exactly inverted to what we had before. Could get this out of the top of the range. Ultimately, nothing changes. Like I've said this entire time, uh, the red yellow line's the last thing to break. The blue bar, it will be under the price in the future. That's the way I see it. Doesn't mean it's not the most difficult thing to be exposed to the entire day. It's like, well, I tell you, the people that caught the low had to experience a 95% retracements just to keep the position. Then any value that there was after the position, of course, 95% retracement. Does it have to be two though? Well, I tell you one thing. Not enough time in the day for two. Not two big ones, at least. Unless we get some sort of like earnings report volatility. But no, the blue, um, or sorry, green line at the high there, I do think that we're going to be involved with in the future. Um, you can see it's kind of out of the top. I think we're going to get through it, not just to it. Not without great difficulty, as it that's the way the Nasdaq wanted it to be, though. So
But by the end of it all, we can see that all of the profits that have been taken in any movements that have been had here, they do undeniably come with like a side of risk that undeniably did not have to be taken. You just keep your stop at the extreme, and it's strange that this schematic, you know, which I invented, essentially, it does not does not provide anybody with a very safe time in this area. But if you decide to have the integrity to withstand any retracements back on what was a clear trade, then you get to maintain and not have to take any risks in the riskiest of environments. And the day started with 161, which is interesting. Yeah, we were looking at 161 in the morning, but since then we haven't seen one. Wasn't there one right here? Yeah, 161 in the morning. Yeah, yeah, it's so disproportionate today. All of the W's and M's I found are very strange looking. Like they feel like they're closer to the B point than they should be. But this is 161 here, eh? Oh, that's so weird. We could actually make a smaller version of this altogether. Um, like, is it not true that in this W, the second low was lower, and then it went to a 161 and played out? And I mean, what's different about this one? It's really not that different. It has a second low that's lower, it came up to a 161 and played out. And I'm like, okay, with these second lower lows, are we going to start seeing 161s more commonly? Because I see that the last 161 that we did, the one thing that it does have similar is the fact that the C point is lower. The second low is lower. And both of the times that the second low is lower, it has meant a 161 that ultimately has no trouble getting back to the B point at all, which I think is great. I love to know that they're going to work. Jack, no. Interesting. Take a look here. Yeah, yeah, so it did step on it like that. Okay, I see that. The bullish divergence did formulate positively. It was nice as well. That was good. Yeah, right. It's interesting that it can come down to something that works all day, all day, all day, and then something different matters more. And I'm like, well, it's like, wow. That's like the weird thing. I'm like, how does that make any sense though? It's like you would think that they would go for, oh, small 188, small 188, small 188s, do a big 188, and that would work. But not a big something else, which is kind of, I think it would throw a lot of people off. Because they expect it to be the same way as what it was when it matters the most. And if we see it imprinting a certain characteristic throughout that entire trend, and that trend is the thing that we're expecting to end, well, let's not expect it to be the same way as everything in that trend. But what about the new thing, for the new trend? And that new thing started like this move last time, as a W with a 161 that came back. And now that we end the trend that separates us from that time, we're doing the same thing that started this circle, which is kind of intriguing because we haven't seen a 161, just like you said, since this morning. And that is the key to understanding that this move is more similar to this move than anything we've ever done since then. And I mean that just reminds me of the kind of movement that we had yesterday. Yeah. I mean, sometimes like lately we've been seeing that it can be between the 227 and 261, or even the 227 and the 300. And right, and hardly ever the 300, but we've been seeing the 300 a lot. Like this high up here, I think was the 300, and oh, that was 261. What? That's crazy. It's too interesting. Mhm. Mhm. Yep. Yeah, cause yeah, the fibs, some of them, yeah. Now it's about when it comes to the fibs right now in this market environment, it's like it like how is it going to be treated is huge to me. Like how is this 188 going to be treated? You know, how what are we bringing to the table? Like how are we approaching it? You know, how big is it? What does it mean to retrace? Like what trend will have to break in order to get us back to the B point, and how big of a deal is that? You know, and how have we treated other levels? Have we tested off of a 141 already, a 161 already? You know, and we're approaching another level. And it's like that matters to me because I'm like, if we've already, exerted energy up and then actually, covered the bases and then done it again, and we're only at the 161 now, and then we've actually come down a bit, it's charging still. And I mean, if we get to the 188, it's not as good as if it just exerts all of the energy past the B point and then reaches up to the 188 is better that way. But this is like 188. It could fire right through and hit a 261. Um, and that's kind of like what we're getting now. It's like we're chopping up when we hit a 188. It's gonna have all this built up energy still, and the 188's barely, gonna feel. It's just up here. So the 188's in line with another thing though. It's in line with the low of that entire range. The POC is at the 261. One thing that I could see is it making this consolidation again at another point. If we could do that up here, that would be ideal. Kind of like similar to how we did it here, except this one doesn't have to go down. It could get stuck into that range. Because basically, what this is telling me is in the event that we shoot up to this level, we could have a negative response. And if it shoots through the green zone, it can step on top of it. That would be really ideal. Um, the fifth wave doesn't have to end. Uh, because a lot of them have been. We've been conditioned today to see five waves have had really strong impacts across the board. And I think that with this trend ending, the impact of the five wave move can also end. And we could start to get something like this where we go 1, 2, 3, 4, 5, and it can't get through the fourth wave. That's what happened when we made this first W. Like it effectively was a W that played out back to the B point off the 161, but in the process didn't go past the fourth wave. So I'm like, and then I can see that that was taken to a whole new level when we were like 1, 2, 3, 4, 5, and then it goes like this and goes up like that. So it's in the business of being able to do that. After it did the 161% retracement, that's what it did next. And I'm like, okay, well, here we are with a potential five wave move developing. And we've just done the 161 part. Could we be on like a wave two right now? It's very likely that it's a smaller version of what we saw in the morning. Curious about that. This amount of space was the same as how much it took to reverse the original one. And it's interesting that the movement that we had out of the bottom is so much similar to what we had out of the top. But what we do next, I think, and you can see how similar those two moves actually are, size. And effectively, what we did next is very similar. Like, it's actually a fact that it was wave two next. After we made this dump down, it went up to make wave two, and it went up this much to that much pullback. And like literally, it is the same. Like the thing that I find intriguing about that too is that from the point that it started this pattern to the point that it literally finished this pattern, it has been confined within the same time and space and distance to end up at the exact same point that it started to the point that it ended. And when it was ending, it was in this circle. We can expect it to change at that exact time, which is interesting, just like we could expect it to change uh, this exact time. It's consolidation, moment that that triangle started, moment that it ended, very much like the same confinement area and the time that it took to get area and to make it formulate that move. So you could say that because of this amount of consolidation, this amount of movement, which we saw here, and this amount of exact precision could be found in both consolidations. And see here now, it's meeting the exact same time and finishing at the exact same time. Because somebody's following the rules. And it's not because everybody's following the rules. It's not because everybody's aware of this. Like people can see this and not have any awareness that it's exactly this precise and exactly this precise. From the moment that it started that consolidation to the moment that it ended it, very particular. When this triangle started, yeah, could you not say that from this circle right here, the point that it started everything in this consolidation, to this point right here where everything ended, there are no similarities to these 2 points right here? Let's take a look at them for a second. Right here and right here. Well, this is the point where everything inside of this area down here decided to double. That's how much that changed at that time. And every single thing that we saw about the way that it traded while it was in there changed at the moment that that hit. And then we were interested in doing this here. So from that very, 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 very bottom to the point at which it stopped this consolidation is exactly the same. And you think that the average person has anything to do with that? No, they do not. They're just part of the liquidity. They're herded around so that they are essentially not in the way of the institutions creating this absolute precision, mathematical precision. And it's like, well, why does it work then? Which is what I have to say. Why is it the case that the people that still have their stops at the low of the day are still safe, and the people that have been fighting for something that's not as good as this low, and it's also down to very precise, absolute conviction. There's not a single maybe or I would like to see this happen or maybe. I'm like, no, straight up. This is the point that it ends. Like, and I know it, and that's the way that it happened. And this is how much pullback that we had and how much pullback that we were allowed, how much time that it took. And if you go back in the video, you can literally see that we were considering it as it happens. And I look back and I'm like, there's not a single thing that I would change given the opportunity to do this day again. As much as I would never want this day to effectively happen again, I think that it's kind of pointless. They should just take this position and have it benefit for a prolonged period of time without the need to have to pull back and get everyone out of the way. But what it does is it means that everybody that gets interested in this first exciting bit and all the chasers that there are that are part of it, and every single person that's interested in shorting that pullback, they can acquire all of these positions in one swift go. Everybody that wanted to be long or anybody that chased it is likely to be out. The only people that survive are the people that have stops at the low, and the people that had the determination, the discipline, or the patience to catch the lows that mattered here. But what's the difference from this low and this low? Is it not true that the downtrend existed the entire time that this low was there, and this low, and this low, and this low, and this low, and this low? What makes this one any better? And it's like, what makes them better than holding this one? That's the interesting thing as well. And I understand that there's nothing better than holding the one at the bottom. So it is very much the case that risks have to be taken in order to get exposure to these small short-term moves. And it depends. It's like personal preference. But if you do have the risk tolerance to take advantage of the smaller short-term moves, then that's the case. But the safer play is definitely holding from the extreme. So what we did right now is just ran in to the green zone, which is the low of the original consolidation that we had in here. We can see that that's the green zone that goes with this. Now, as I mentioned, I do believe that we're going to do the spikes out of the other side of the consolidation. It's been very uneven. And of course, what we've done today with the majority of these patterns is just get to this point. I think that we are going to start to break this point. And, when I look at that, this is an interesting pattern. Yeah, with a smaller, like if I draw a circle here and a circle here, it gives the impression of a head and shoulders to an inverse head and shoulders, which we know has that crossing of the middle 8 times. I mean, like, if it's going to cross the middle 8 times, how is it not just a way for it to consolidate? It totally is. I mean, this is the consolidation. The heads are merely just spikes out of the consolidation. And it's been very typical for those spikes to be the size of the consolidation as well. But you only find things like this if you look, right? So that's the interesting part about it is the distances that we have here um, are incredibly. Wow. Okay. So did you know that this consolidation took this amount of time? And the exact amount of time was taken again before being able to leave that area. Not the case anymore. On a second. That's intriguing. So is it not true that at the point that you see a circle, something controversial happens? And again here. So like at this point, this consolidation ended. At this point, this spike was doubled out of the other side. The fact. At this point, we did it again. But from the time that it took to get to here, we took that same amount of time to get from here to here. And that same amount of time to get from here to here. And this is the first time that we may not actually be at the same spot. It's getting very close though. I think that it's going to be quite controversial actually to be there at that point. It will be 6 times that it's hit that same level. Kind of intriguing. Definitely intriguing. So basically, I'll keep this handy, but I would suspect that we could actually produce this movement. And the next time we produce this movement, I don't think that it's going to produce the same result. Every time that we've given this movement, um, it's resulted in us being able to rival the lows. I think the next time we make this movement, it's able to hold its highs. Because think about this one for instance. When we made this movement first off, it shot up through to this high, and it was taken back, and effectively it doubled to the downside. Like whatever it gave up, it took back twice to the downside. Now, what it did here was a little different. It would be quite remarkable if it makes its way into that circle. It's not something that I really have. You can't really do anything about it. I mean, if it's not much you can. It's basically at the level that it would have to be at in order to claim that circle. Um, what could insinuate that this much time could be spent at this level? Like, how much is our average consolidation size? Maybe this size? It's roughly around that size. Would that size be appropriate? Doesn't honestly look like it. I think it would be difficult, to be honest, to be at, like I said, to be at that spot for that point, but shall see. This is where I could say that we could expect change sideways, up, and then down, the bullish pattern. And involves a downtrend breaking upwards. The biggest component in the entire pattern is a downtrend. Yet the end of it does not mean down. Just most of it is down. Doesn't mean it ends down though. The interesting part. This is still the middle area though, so we must be careful. The pan's still hot, like I say. And I'm like, okay, those average size consolidations? What's been the average amount of distance that it's able to go? And I mean, did we just define that distance in this move? Like, could it be that it wants to make that size of consolidation? Sure as hell made the distance very clear. And I'm like, well, is this not the distance that we do when we make a consolidation? Because it seems to be pretty much the distance of every consolidation that we've had so far. If I change the color of this, we can clearly see that we had that distance below. We even shot out of that distance on the top. Why? Because consolidations double, and that's what that one did. And then we paused for nearly every single counter trend move that we had was this size. So I'm like, yeah, getting through the high of that, it's kind of a big deal. Because what's the price of not having broken this high of the consolidation? Well, we could be inside of that confinement area for as long as we typically were inside of other confinement areas of its size, which is roughly this time, like that, and like this. And then I'm like, well, how did this entire day start? Well, it started with the ability to take this level, first consolidation, make a spike out of the bottom. Second consolidation, make a spike on the top. Third consolidation, spike on the bottom. Fourth consolidation, spike on the bottom. And that's the basis for infinite head and shoulders to inverse head and shoulders. Been the theme of the consolidation, where undeniably at the beginning of the consolidation, things had a larger spectrum, where the entire spectrum has shortened and become smaller and less than it was originally, meaning it's very easy just to plaster a triangle over top of it. But that doesn't do anything other than basically outline the extremes, which are important, sure, but it doesn't tell us anything about where it's going to go. I think that the thing that they've made most difficult today is to retain, maintain, and obtain a long trade because it's the most valuable. Contrary. Yep, yep, yep. Big triangle could definitely be outlined. And with, yeah, I was thinking about the imbalance, but with all of this congestion for the imbalance, it's like we could get some expansion on the imbalance. I'm like, well, the one thing that it's been doing since it's been in this trend is it's been very much coming to each one of these points. And this is the first time that I think it's not going to. And it's funny too, because as I was saying that before, it was coming down to that point and respecting that level, but it's not at the right time. And that means it's not the same thing. Because unless it's hitting that level at exactly that time, it's out of line. And if it's not going to make it even on both sides, well, that's another thing that's kind of like tainting its relationship with its ability to do this. I've noticed that when we do make these means, like these medium levels, we'll take a distance that we had out of the top and 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 put it out of the bottom, right? On both sides, and then it will become the move in the middle. Like it's so common to see that we'll make a movement like this around the sides, and you're like, all right, well, this is the high and this is the low, and then what we do is another one inside the middle that is literally this size. And that's how we've been making 61s to 61s very frequently. Like we love to make this the 61, and then we love to make this the 61, and then it could try and do another one inside of here. Usually it's not, usually it's so small that it can't do a third one, but sometimes it can. Sometimes the third one is the one where things can change the most. Because, in order to make three of something, there's a relationship with five as well. Like if you make three upwards moves, you've got five moves altogether. Because to separate the three, you have to have two, you know? And it's it's weird when you look at a three drives pattern, one, two, and three, and you don't consider this at all. But you still have one upwards move, two upwards move, three upwards move separated by two downwards move. Technically, it still is five, and it's like, how can you have three of anything that's not separated in some which way, shape, and form by either some sort of pullback, and going to involve two pullbacks. Now, the thing that's interesting is it doesn't necessarily have to come down on the fifth. It just does usually. And that's an interesting statement. Because how many times have we seen more than five waves? And how many times today have we even seen that the fifth wave can stretch on and be the largest wave? And then how many times have we seen today that the fifth wave might not even form and it just gets cut off completely? You know what I find interesting is that we can get a five wave move where the fifth wave is large and it doesn't come down. And then we can get a five wave move where the fifth wave doesn't even form and it dumps like crazy, like that. And one that it has a large fifth wave. And it's weird because that's the controversial time where it's supposed to make the move that everybody's been waiting for, right? And for it to form and be weak like this and then have an effective play out and then one that's like really strong, one, two, three, four, and five. um, Sometimes it doesn't necessarily have to come down. There's been other environments where that consolidation can hold for a prolonged period of time, typically when it comes from a downtrend. Like, because it would be easier for it to fall down if it was coming from an uptrend as well. But I do believe that this will become a B point in the future. Interesting. In the short term. So this is basically what I said here is really tough for those that didn't keep the stop at the low. I expect us to step on the highs here, as you can see. May take more chop first, but the close is near, and that can increase the volatility and is capable of breaking the trends that can initiate the move bar through the blue bar above. And basically, this increase in volatility that we get at the end of the day it could break the trend and get us through there because I'm like, this trend is starting to become very difficult to hold. Like it's already showing us that it's comfortable with breaking. Starting this slow and breaking it out fast, ending up, a lot of the people will assume that the next time that we start to go sideways, that it's going to take back most of the pull back. And I think that we go sideways and then up next time. And not necessarily sideways here, but the next time we do go sideways, like, okay, if we were to talk about what could be the next sideways area, well, I like the idea of us responding negatively to the blue and white line because it's also the red zone and it's also the high of the node, but we want to see it, uh, I want to see it honestly go through this point. I want to see it get more than this. Like, I want it to show me that it doesn't cap out here for a pullback roughly this much. Like if it did, would it really matter? Not really actually, now that I think about it. It wants to stay above the low of the range. That's the important part. And I mean, as I said, it looks like it was a battle, but no, they're not getting this point. And like I said at the beginning, they didn't want, they were going for it, getting close to it, making everyone think that it was going to get it. Not like anybody's aware of these points, but institutions definitely are. The signals at which they give every single time that they meet these points is incredible change. Every single thing from the last point to the next point is up for change when we run into one of these times. And now I mentioned that we were going to do this, but not only when we do this, it does not end up by taking back the entire move and doubling it to the freaking downside, but actually breaking through the high. Because we haven't been able to do that. Everything we've ever done through the top of this move has always come back. And I mean, like, I've had enough of that. I think it's done. Now, the difference between this and here, this move here and this move here has been our consolidation so much. And I'm like, okay, we've been seeing that a lot, and it's been so apparent in a lot of our other consolidations that that distance, we can, that's the distance that it broke out on the top. It's also the distance it had in the last. But yeah, so far it's acting like it usually would, and I'm saying it has to change, which is always a tough thing because how many times has it done the same thing and why is it going to change, right? It, of course, it's going to have to change at some point. And when things start to become so different that it's hard for it to remain, the same, it's hard for it to retain those characteristics because of those changes that have happened. And you can say it is obviously changing, and you can say some things are different and you can prove it. Well, don't be surprised if more things change, of course, because it's like a snowball effect. Because you can't take back the things that have changed. Do you know that if it makes a distance that's farther than this away from this medium line, it will be a change it can't take back? Like, no matter what it does, it can't correct the fact that it's either not making the distance or not being even. And I'm like, man, I tell you right now, this distance at the bottom is being morphed on the other side. It is not the same distance on the other side of this medium line anymore. It is starting to be comfortable making more. And I noticed that. And I'm like, well, what about being even? It used to be even. Now it's not even. Like look at how even it was on the short term over here. Like when it was like, hey, I'm even on the big moves, and then I'm even on the small move, and then it tried to be even in here and everything, but then it just no, it stopped at this moment. Things changed. And it's a controversial point to change things because there's no more time left. But this point leading to this point, I didn't consider that.
as much. Like, does it need to waste the time to get to that point? Like, one thing I don't like it doing is it actually keeping the same curve and actually keeping the same confinement area. What I don't like to see is, well, what I don't want to see here is the same pullback. That means we're doing the same crap, and I don't want it to be doing the same stuff here. I want to see something different. And it shouldn't be that hard to do because I think it's harder to do the same thing over and over again than it is to actually do something different here. And that's particular to here, because this area is so particular. Like, it's unbelievable that the first consolidation could be marked like this right here and this right here. That's where it all started. And then from that point on, we can see that that exact time changed what? Well, the next time that we hit that time, it it literally became the point of an equilibrium. Like, that became the most even point across this spectrum, and it took the exact same amount of time to formulate the downwards move and the same distance to formulate the upwards move, and it all landed at the exact same point that it began, along the same trajectory and in line with the same time that it took the last time, before doing this again along the same level to acknowledge that's exactly what it is doing. Why would it do it again right here and make it even again if it wasn't doing that? And that's like that's my argument towards this is something and it shouldn't be disregarded. It doesn't matter if we haven't been taught it or we haven't been it's what the market is doing. The market is showing us that this is what it has been mathematically respecting as it's been in this trend, and that every single distance and consolidation is put to the test when it meets that time. And well, God forbid we don't notice this the next time we're in a trend, and this time's coming up, and we don't understand that it can inflict change. And also, just to not point out as well, like, check out how it actually hits the point every single time. That every single time that we're in this trend, that it's hit that point and then come to this point and then come to this point, and this one it wasn't supposed to come to, and it's doing a good job of not coming back to it. I mean, it's doing the thing I don't want it to do though, which is fine. But I mean, at the end of the day, I wouldn't drag your stop within its path of making this crappy pullback. But it ends without, like, I mean, is this not a signal that it's ending? Because one thing that it's done the whole time that it's been in this environment is get back to this circle. And it not doing that is one huge signal to that things are changing. Because it would be naive to say, well, things are the same, because they're not. I mean, I can prove it. So it's really interesting to me because we're on the brink of change, which is to anticipate the change is to understand the opportunity, like in an interesting way. Because if you don't understand the change, you don't see the opportunity, really. So kind of. So it becomes like we're in the business of spotting the change, not repeating the strategy. Like most people think the repetition of the strategy is the key, but when the market is full of so much change, how do you think that it's safe to assume it's going to be one way time? And I mean, yeah, sure. You know, the way that it has been in this environment, the best strategy it has ever had in this environment is to trade back to the next point. One thing that you could be doing the whole time is to trade to the next point and assume that it's going to land in that next point until we were ab- abruptly alerted by the market's movements that it will not be doing the same thing. And you want to know one thing that's changed about this point that every other point had going for it? Underneath this line. Yeah, now we're not. And that's a fact. And I mean, like, can we expect it to come back beneath the line to get to it? I mean, that seems like a bit much. And I mean, like, if that is the the strategy, is that the play? I mean, even if it does do that, I mean, it's not something I really think it's wise to be a part of. But I think it's wise to assume that with so much change, that we could assume that we're closer to the next thing than the beginning of the last thing. You know, we're closer to the next trend's characteristics showing than what we see here. Like what we saw at the beginning of this is that it was incredibly, you know, determined at making sure that at the point that it met each notch, it made change, and that everything that it did inside of the uh, medium point was even on both sides. And as it continued, it lost its ability to make large moves around the medium point. This was the last time, and it was smaller, right? So we could see that its ability to use it uh, was getting less inclined on using it. So we could see that was the first change. Then the next thing was that it broke the entire trend that was containing this environment. And when it did that, it made things uneven. And from the point that things were uneven, it decided not to really use the underside at all. Do you know that inside of this environment here, like between these two notches, we've spent the least amount of time underneath this entire line than any other one? Oh, I guess other than this one. This one, it didn't go underneath it at all. But this is the time where we did break the trend. Between these 2 points, it has been responsible for breaking and retesting the trend. And under no circumstances has any other one been responsible for breaking and retesting the final downtrend. We've pulled back more than our average countertrend pullback as well. Centralizing for the imbalance is not abnormal. In fact, it's normal. The head and shoulders to inverse head and shoulders is definitely a strange concept that I think is kind of relevant in this environment. The heads haven't necessarily been very even, but if you remember early in the day how we made the head and shoulders to inverse head and shoulders, you could see that the heads were even originally, and then it was like this inverse that really threw everything off. Like here's a shoulder, here's the head, here's a shoulder, here's the head, here's a shoulder. What happened to this head? It was small, crappy, right? Now look at the one that we just made on the short term. So we go, here's a shoulder, here's a head, here's a head, here's a shoulder, here's a head. Not exactly the same, but it's almost like you could say it's trying to be, which is ultimately to end up very triangular. And if it does come up on the 1 minute and it doesn't come up anywhere else. Oh, okay. Okay. Click, go to it on everywhere else but the 1 minute and double click it and just check if it's visible. Because you might have made it not visible on the 1 minute and visible everywhere else. That might be. So one thing, if you go to where it started, on the 1 minute and see if it loads in. And if it doesn't, then it might be because it's too far back for it. But it should though. I mean, it usually would. They haven't had it cut off in the past. So instead of keeping the trajectory with this line like we have, instead it's found its way into this upwards move. Very abstract. Yet one thing that I find incredible is the precision. Like it doesn't only take the distance into consideration, but every single that it does while it's contained within this shape, the starting point and the ending point are made clear. Regardless of what it does from here until then, it's very likely that it ends up where it should at the end of the sequence. Which is very controversial, more controversial than any other time that's ever done this, because that is circling the imbalance. It is stating that at the imbalance, we will go into that circle, regardless of whatever movements we do here. Very interested in that myself. I think that when we get to that circle means more than you think. It's not meant to just go to it, but through it. What I find intriguing about this is that it did not get to this circle. It wasn't supposed to get to this circle, but it's a fact that it didn't end up getting to it. And that is a big change. It's a change that can lead to other changes. Whatever's sold off on the imbalance is subject to being bought back up in the form of wicks and spikes. This trend right here, more attention for me than any other one. More relevant than whatever support lines. He may seem to be breaking right now. What they get to be is purple. Neutral purple. Because they get tested like triangles. That's all it is. The blue line, the imbalance. This is the imbalance. What it has done, created many B points. Every single one of these B points is subject to being hit. I want to drag this. This one's not as important as it once was. All of the pressure gets put onto this major downtrend. All of what is sold off will be bought back up. That's just the first B point. the imbalance volatility is coming to an end. Question becomes, have we made it even on both sides? Something that we didn't do for a couple squares, but something that we're undeniably close to doing in this environment. A wicks and spikes environment, typically it would be interested in line. Kind of like for a baseline. The blue line's easy to step on top of. That doubling of the distance, very, very close. It was pretty lenient about the distances. It had wicks and spikes on both sides of the extremes, and like it did before, we that and of course, with it doubling that distance, it's crossed through the 188-200. But only just. Typically when it does that, it'll come back and test them from the underside, so watching for that is normal. And it's part of the line test, I think, at the high. Blue line on the bottom is a different blue line. It's not necessarily part of the equation today. Line. That goes way back, all the way up. There's the blue line test. Like I said, it was part of the blue line test. Making a 61% retracement here is absolutely fine. Attack the blue line again in a moment. See that 61 in action. Basically, we just pulled back 61% of that entire push up right there. That's why it's like kind of pausing a little bit there. That's absolutely fine. Next best move is to make an attack on that blue line again off the 61. Yeah, definitely could increase volatility there. Mm-hmm. So far so good on attacking the blue bar, or blue line. Basically just hit the red zone. I think that we're going to be weakening the red zone down a bit. Oh yeah? The view app, eh? Yeah. Well, that is the close there, and not moving too much, but definitely be monitoring it and see how things are in the after hour session. With that being said, hopefully you guys have a wonderful day, and I'll catch you guys later. Anytime. Have a good one.